But actions are being put in place to make the industry a bit more environmentally friendly. Walk us through those steps that they're taking.
That's it. So there's a first step that would involve using low emission fuels or biofuels that would significantly reduce the existing emissions. And then at a regulatory level, when it comes to the policy and the governments, there are steps being made as well. I would say that the most significant ones come from the European Union, which started to track emissions a few years ago and is now looking to include shipping emissions in the emissions trading system. So that would significantly reduce and help calculate the emissions from the shipping industry. Now, China is taking similar steps. So at the moment, regions need to report shipping emissions to the central government. And finally, we have the International Maritime Organization with a pledge to reduce shipping emissions by 50% in 2050. Now, we must say that that pledge has been considered insufficient by environmental groups, but at least some steps are being taken.
So to get to 2050, the industry obviously is going to need to start tapping some new technologies. What new technologies are you seeing being introduced into the shipping industry?
So we have seen pilot technologies being developed for years now, but what's interesting about this current moment is that we're seeing big players invest in these technologies that are not yet economically viable, but that one day might be. So for example, we are seeing earlier this year, the world's largest agricultural commodities trader, Cargill, saying they will invest in attaching sails to their ships so they can make any technology that they run their ships on more efficient. Similarly, we have seen a spin-off of Airbus, the aeronautics company, developing a similar application with kites. We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing some ships that will be able to run on hydrogen in the near future.
Coming up, rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life. Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
Concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube sized concrete slabs of different compositions and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, E-concrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing e-concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
E-concrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism die, in the case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. E-concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, e-concrete prevents some CO2 from being released into the atmosphere.
for every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Live from the Bloomberg Interactive Brokers studio, streaming on YouTube. It is Wednesday, June 2nd, 2021. Stocks generally higher. We are awaiting some headlines involving the Fed's Beige Book, which is just a great snapshot, current snapshot of where things are going anecdotally when it comes to the U.S. economy. In the meantime, as we wait for those headlines, listen, we've got a lot of Fed speakers, but it's hard to tear yourself away from AMC, Tim, because jumping the most intraday since January, it's up another 100% today.
Well, don't blink because it might go higher or even lower. Yeah, 98% as we speak, Carol. For those paying attention, $63 a share and keeping track. This makes it a company that has a market cap right now of $31.6 billion.
Yeah, it's just remarkable.
Mind-boggling.
And it's got billions of dollars of debt on the balance sheet. Listen, as we wait for those Fed Beige Book headlines to cross the Bloomberg terminal, and keep in mind, this is going to help set the agenda for the June 15-16 meeting of the FOMC. We'll bring them to you in just a moment, but let's get to Charlie Pellet with a check on that trading day. Charlie, where shall we begin?
I'm going to repeat what you just said about AMC, because I look at these numbers. They are just staggering up today by 100%, as Tim mentioned. AMC surging again today. Fed's Beige Book out. The U.S. economy expanding at a moderate pace from early April to late May. Those headlines right now on the Bloomberg Professional Service. We'll have more insight for you coming up in just a moment. Equities, a mixed day, been a choppy session. The S&P higher right now, up by 1 point, little change. We've got the Dow up 17, up by less than 1/10 of 1%. Nasdaq down 22, a drop there of 0.2 of 1%. 10-year yield 1.59%. Gold up 0.3 of 1%, 19.06 the ounce, and West Texas Intermediate crude up 1.5%, 68.76 a barrel. So again, we're looking at a Fed Wednesday here. 10-year yield 1.59%. I'm Charlie Pellet. That is Bloomberg Business Focus.
Well, thank you so much for that, Charlie Pellet. Bloomberg Business Week is brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more.
All right, let's set the market drivers report. And let's set the Business Week agenda. With us is Dave Wilson, stocks editor here at Bloomberg News. And this has a lot of Fed speakers today. Just want to point this out. And Patrick Harker of the Philadelphia Fed saying that the Fed needs to start discussing tapering, the timeline for such. So we're going to keep monitoring that. Dave Wilson, you've been on TV, you've been on radio, you've been talking a lot about AMC today.
Oh, you kind of have to. I mean, bear in mind, you go back to January, sort of the belle of the ball when it comes to these meme stocks, the ones that amateur traders on Reddit are favoring, has been GameStop. And now it's been supplanted by AMC. You know, $30 billion plus in market value, as Tim mentioned. You know, the biggest company in the Russell 2000 index by market value. And if we're in the S&P 500, it'd basically be in the top half by that particular metric. So
it would be the number one performer probably today.
Oh, yeah, no question. And for the year as well. So,
exactly.
You know, it just goes to show you, how things are changing. It's amazing what a little popcorn will do.
Well, to that point, Dave, you're referring to the movie theater chain announcing early this morning, 7 o'clock, in a press release that it was going to reward small-time investors who've been instrumental to AMC's wild share rally this year. Special screenings, free popcorn. What do you make of CEO Adam Aron and AMC really leaning into these retail traders and trying to build this direct relationship with them?
Well, it just shows you how things are so different, or so it seems. Because, if you think about the relationship between companies and investors, it's always been about the big institutions. That's why you think over time, rules have been put in place to provide transparency. So, companies couldn't whisper in the big investors' ears without letting everybody else know what was going on. So, you have the quarterly conference calls and everybody has a chance to participate and that sort of thing. So we really haven't sort of seen the flip side of that. And you think about what's been going on this year is sort of established that there is a flip side, that you have this trader community out there and they're willing to invest. So why wouldn't you, as a company that happens to be sort of favored by them, try to build a relationship, just as companies have done historically with the big institutions?
All right, just remember, though, people can get hurt when they're trading. And these trades, these type of trades can move very quickly in the other direction. We keep talking about the importance of fundamentals, whether it's a GameStop, whether it's an AMC specifically. At the same time, we do have fundamentals coming in. I want to go back to the Beige Book. I know Beige Book sounds boring, but it's not always. The Beige Book saying economic activity expanded at a moderate pace. And so we are seeing, the expectations that the economic activity will continue. And Dave, I do wonder when investors start to focus on something like this and say, okay, now we've got to wonder whether that inflationary uptick and those concerns, whether or not they continue to stay with us.
Right. There are a couple of other headlines that we put out from the Beige Book that jump out. Price pressures increasing further since the previous report a few weeks ago. Labor demand seems staying strong, but supply constrained. It's just a matter of being able to get the workers, just as it is with all kinds of things at this point, like semiconductors.
Right.
That's an issue. And it's funny, Elon Musk over at Tesla, putting out his tweet today talking about how, companies going after chips, specifically what they call microcontrollers, in essence, a computer on a chip. What's going on in the auto industry now is analogous to what happened last year when everybody was hoarding toilet paper in the midst of the pandemic.
Well, I'm just going to say that I think Elon Musk should be thinking about his market share loss because his stock has taken a little bit of a hit today. We're seeing that the stock, the biggest drop in 3 weeks, specifically EV sales, showing a loss in global market share for the month of April. And I just think, again, going back to fundamentals.
Yeah, Dave, you bring up a really good point, the idea of hoarding, which Elon Musk referred to in his tweet, comparing it to toilet paper. We had a big take a few weeks ago all about this. It wasn't just consumers during the pandemic who were hoarding things, wipes, toilet paper, the list, cleaning products, the list goes on. But it's companies that are worried about pressure and on their inputs.
Oh, absolutely. I mean, and the auto industry is kind of front and center when you have that consulting firm, Alex Partners, talking about, $110 billion of lost sales potentially for the automakers this year because they can't get enough chips. I mean, it shows you what's at stake, and you can understand why companies would pull out all the stops to try and line up whatever supplies they can. And if it means over-ordering, so be it.
Well, there was a great story over the weekend. I can't remember whether it was the Times or I'll have to check. I think I tweeted it out. But it was basically this whole idea of just-in-time inventory that we have moved as a global society, in terms of companies, that they don't keep a lot of inventory on hand, including the key components that they need for things, so that all of a sudden when there's supply shocks or supply shortages, everybody's kind of in a rough place because everybody needs the same stuff at the same time. And they just can't go, let's go to the warehouse because we've got a stockpile. They just don't have it.
So the question is, does it change the way that companies plan for the future? And do we see more warehousing of products?
Exactly. I don't know. Because there's a cost to that. And
there's a huge cost to that.
The reason they've drew down those inventories is because there was an extreme cost to it. And so there's been so much pressure, rather than spend money on building up the inventories, they'd rather spend it on buybacks and things like that.
Lots of issues to ponder as we move forward, no question.
Getting off my soapbox right now.
No, it's all good.
No, I know it is. All right, Dave Wilson's going to be back a little bit later on with his chart of the day. Let's do the bite of the day.
It's one number that tells us a lot. It's brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. Learn more at GEP.com.
All right, Tim, today's number is 10 under new gender equality plan, new gender equality plan from Prime Minister Mario Draghi. Italian men and women will finally have the same earnings and employment potential, but it's going to take another 10 years.
On the pay front, Italy is already faring better than other European countries such as Austria and Germany, but the nation has the lowest rate for female workforce participation among advanced economies, with only 55% of women counting as active players in the job market, compared with 73% for men. That's according to the statistics agency Elstat.
Which is fine if that's what they want to do, but...
Well, look, it makes me think of what we're going to see on Friday with our jobs report here in the U.S., labor force participation, and to what extent women rejoined or did not rejoin the workforce.
10 years. Why does it take so long? Why does everything take so long? All right. It's going to be that kind of a day. Baby shark.
Oh, you did it. You said
it. There'll be more of that coming your way. All right, let's get a check on world and national news. Over to Nancy Lyons. She's in our 99.1 newsroom in the nation's capital. Hey, Nance.
Hey, Carol. Negotiations over a massive infrastructural upgrade are front and center today at the White House. President Biden is meeting this afternoon with West Virginia Republican Shelley Moore Capito over the new counterproposal from Senate Republicans. Capito says the GOP alternative focuses more on traditional infrastructure, things like highways and bridges. Bloomberg government's Emily Wilkins says the two sides may be talking, but finding common ground could be tough.
Both sides are still more than $700 billion apart. They don't have an agreement on how they're going to pay for this transportation package. And in addition, President Biden and Democrats want there to be other things besides infrastructure. They want childcare. They want climate change initiatives.
Wilkins says Transportation Secretary Pete Buttigieg has mentioned a deadline of next Monday to reach some sort of deal before opting to go it alone. President Biden is launching a month of action to get more shots into arms before the July 4th holiday. It includes free drop-in childcare at various childcare chains and extended hours at vaccination sites.
Including pharmacies that will be open 24 hours every Friday night. For 24 hours they'll be open this month.
Biden has set a goal of having 70% of Americans vaccinated by July 4th. Results from a second tester in, and Kentucky Derby winner Medina Spirit has again tested positive for a banned steroid. It raises the likelihood that the colt, trained by seven-time Derby winner Bob Baffert, will become the second horse in the 147-year history of the race to be disqualified for a failed test. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Wonder if BlackRock's Larry Fink talks about Baby Shark.
Is this going to be something you're going to do throughout the day?
I warned you. I warned you this morning when we were taping. I warned you. Number one red story on the Bloomberg terminal in the past 60 minutes is BlackRock's CEO, Larry Fink, saying that investors may be underestimating the potential for a spike in inflation.
Policymakers must weigh inflation against climate concerns. BlackRock CEO Larry Fink saying that investors are underestimating, as you mentioned. He says, quote, most people haven't had a 40-plus year career, and they've only seen declining inflation over the last 30-plus years, Fink said at a virtual event hosted by Deutsche Bank on Wednesday. So this is going to be a pretty big shock, end quote.
But economies change, economies
Yes.
evolve, and there are things like online shopping.
I was just going to say
and Amazon,
e-commerce.
right? That how many times are you in a store? I know I've done it where I'm like, I see something and I'm like, let me go see what it is online if I can get a better deal. I don't need to have it today. And
Carol,
right?
I used to do that, but now I just go to get online and get it and don't even go to the store.
See, but you could shop around,
Yes,
right?
you
You can
can.
look at the different price alternatives. And I do think that there are, and people way smarter than me would say that we've gotten certainly to an environment where consumers in many ways do benefit because they can easily compare or do comparison shopping and kind of get best price. And that does keep inflation down. You look at something like academia, we know schools, colleges, universities, we're going to talk a little bit about endowments and investing in a little bit, but we know those types of things still cost a lot of money. But I don't know. We'll see if he's right.
Yeah, we'll see. And we'll see to what extent inflation is transitory, as the Federal Reserve says over and over again. We did hear from the Federal Reserve with Beige Book headlines. Price pressures increased further since last Beige Book. Labor demand seen staying strong, but supply constrained. Those two things do, in other words, mean inflation.
Right, exactly. And it'll be interesting, as he points out, too, that we're at a time where we're seeing lots of fiscal stimulus come in to the system. And what if we get to a point where the Fed has to raise rates in an environment where we're also pumping a lot of stimulus? Like, it kind of competes against one another.
And what does it do for markets?
Yeah, exactly.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. Next Wednesday, we begin, though, with the Federal Reserve's Beige Book report, and the pace of the recovery picked up somewhat in April and May. In its Beige Book survey out today, the Federal Reserve said, quote, the national economy expanded at a moderate pace from early April to late May, a somewhat faster rate than the prior reporting period. The report was based on information collected by the Fed's 12 regional banks. Equities pared back gains as the tussle between economic optimism and inflation concern continues to play out in markets. S&P little changed right now, not even little change, flat on the day at 4202. NASDAQ is down 0.2%, lower by 32 points. We have got the Dow a little changed, up by less than 0.1%, higher by 17 points. Again, little changed ahead of Friday's jobs report. 10-year yield 1.59%, 10-year up 4.30. Gold up 0.4%, 1907 the ounce. Crude up 1.5%, 68.75 a barrel. AMC Entertainment up now by 104%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So, Tim, got to say, a favorite event where we get to check in with what's on the minds of investment professionals, the trends they care about, that their clients want to know about, and the voices they want to hear from, and just kind of how to get it all done. It usually happens at the annual BNY Mellon Pershing Inside event. It's being held virtual this year, getting underway next Tuesday. So great to have with us and to be talking again with BNY Mellon Pershing's CEO, Jim Crowley. He's with us on the phone in New Jersey. Also with us is the company's COO, Emily Schlosser. She's on the phone in New York City. Jim, Emily, great to have you here with Tim and myself. Jim, I want to kick it off with you. How are you, and what's the past year been like for you folks?
Well, Carol, Tim, first, thanks for having us. It's a great pleasure to be back and wish we were in person.
Me too.
It has been, 2022, we'll be there.
All right.
It has been, obviously the last 15 months have been quite a challenge, and, two priorities really. First was obviously the safeguarding, the health and the well-being of all of our people. That was priority one. And then, the second thing, Carol, that really became clear to us is that there really is no substitute for business continuity planning and testing of your business continuity processing, because it became clear in March when we left the office on March 13th, literally overnight, we were virtual, working from home. And thankfully, we didn't miss a beat through what was really tremendous volume and volatility.
Emily, come on in here and talk a little bit about what it's been like for you as Chief Operating Officer. What are the changes that you've made, and how are you thinking that some of those changes are going to be permanent on the other side of this?
Thanks, Tim. Yeah, and thanks to both of you for having us. It's been quite a ride, as Jim pointed out. So I joined the company as Chief Operating Officer last July in a fully virtual environment, which was interesting to say the least.
Yeah.
I did have the privilege of meeting Jim briefly before I started, but otherwise I've worked largely for the last year virtually with all of my new colleagues. But it's been great. Look, we have adopted very quickly to the virtual environment. And we are thinking very carefully about what does this mean for the future. And I think we're seeing employees that are really getting accustomed to working from home and having that flexibility. And then also people who are itching to get back in and interact with people in person. So we're looking at options for how we continue with a hybrid work environment to achieve both of those needs while building the best environment to serve our clients.
I just want to dive right into that because, man, Tim and I, every day, there are stories on the Bloomberg, especially within the financial community, that you are seeing a lot of, it feels like we got to be back in the office. And it feels like the tone of the conversation, Jim, has changed a little bit from maybe a year ago where we're like, well, maybe this hybrid stuff makes sense. I remember James Gorman thinking about maybe we give up some real estate space to where everybody now says, wait, we got to be back in the environment. Your financial community, you guys are working with folks that are dealing with millions and millions of investor accounts globally on a daily basis. What are they saying? Are they hybrid? Are they back in the office? What do they anticipate?
Well, many of our clients, Carol, are back in the office. I can't say, though, that there is any one client that is back in the office full-time with their full staff. I think most people are still sort of working through this environment and trying to figure out how to be hybrid, who really is essential in office, and who really isn't necessary to be in office. And in fact, for our clients, the most important thing for them is being in front of investors, being in front of their clients. And that
is there a lot more virtual going on with that, and are clients comfortable with that, Jim?
Much more virtual, though I have to say, clients, particularly when you're talking about their investments and their life planning, they really do want to have a personal relationship. And having a personal relationship through a WebEx or any other sort of form of video conferencing isn't the same as sitting across the table or meeting in the restaurant. And, I've actually, myself and Emily, we've been on a couple of business trips now where we've actually met with clients in offices, and it's the energy is so much better, and the opportunity to communicate clearly and sort of get a sense of what the other person is feeling and thinking, it's much more valuable.
So, Emily, what does that mean for... Well, yeah, jump in. Go ahead.
No, I was just going to say, and we have seen their investors coming in and out of their offices too, right? So we are seeing that interpersonal interaction happening again in their offices too with their clients.
Hey, Emily, we only have about a minute left here. We're going to talk more about this on the other side of the break after we do some news. But talk a little bit about how programming for Insight 21 is different this year, given the different needs and what you're hearing from clients.
Yeah, so having a virtual conference this year actually gives us an awesome opportunity to reach a much broader range of participants. I think we will have attendance from well across the globe, and we are anticipating having many more people. We are focusing our topics on growth, driving technology and innovation. What does this new digital virtual world mean? Of course, we will hit topics like we always have on market insights and investment solutions, and how we're thinking differently about organizational constructs in light of everything that's changed over the last 15 months.
Well, we want to ask you guys if SPACs and meme stocks are going to come up, or have they come up with clients, because it just seems to be top of mind, certainly every day on the Bloomberg. We're going to come back with BNY Mellon's Pershing CEO Jim Crowley, along with the company CEO Emily Schlosser, continue talking about Pershing Insight 2021. I wish we were there.
Yeah, so do I. Next year.
Yeah, exactly. Fingers crossed. World even more back to normal. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You're listening to Bloomberg Business Week. Carol Master along with Tim Stenovic. We know it's been a really rough year, to say the least, because of the pandemic. But, you know, surprisingly enough, investors, certainly in the financial markets, many have done okay.
Yeah,
if not well.
It's been remarkable over the last 14 months, at least in the equity markets. In just a few minutes, we're going to get back with Jim Crowley, CEO at BNY Mellon's Pershing, and Emily Schlosser, Chief Operating Officer at BNY Mellon's Pershing. In the meantime, let's get a check of that trading day from Charlie Pellet. Hey, Charlie.
Here's what's going on. Let's begin with AMC. So far this year, up 2,830%. AMC up today by another 93%. GameStop shares surging 10.3%. Equities, however, paring back gains as the tussle between economic optimism and inflation concern continues to play out in markets. Right now, we've got the 10-year yield 1.59%. S&P 500 index again calling it flat on the day. We've got NASDAQ down 25 points. A drop there of 0.2%. NASDAQ 100 index also down 0.2%. Russell 2000 down now by 0.1%. The Dow up 14, also little changed, up less than 0.1%. Gold up 0.4, 19.07 the ounce, and West Texas Intermediate crude up 1.6%, 68.82 for a barrel of WTI. Israeli health officials have found a probable cause between Pfizer and BioNTech's coronavirus vaccine and dozens of cases of heart inflammation in young men following the second dose of the vaccine. Lauren Sauer is an assistant professor of emergency medicine at Johns Hopkins Bloomberg School of Public Health, and on Bloomberg Television and Radio this morning, she talked about the vaccine and the second dose.
Side effects can be worrying, and they can feel very scary to the general public, and I completely understand that. To me, what is significantly more scary is COVID-19. All of these side effects are important to note, important to be aware of, important to look into the underlying health impacts that they have. But COVID-19 is a dangerous disease, and it is way more dangerous than the vaccines.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking some of the vaccine stocks that we do follow. Pfizer up 0.7%. BioNTech up by 5.2%. That's its German partner and the ADRs. AstraZeneca's ADRs down 0.2%. Moderna up 3.7%. Johnson & Johnson up by 0.5%. After earnings, Zoom Video Communications down now by 0.4%. Recapping, S&P up by 1.10, yield 1.59%. I'm Charlie Pellet. That is a Bloomberg Business Fund.
It is indeed. We are caught up to date. Thank you so much, Charlie. Hey, listen, let's get back to our guest, BNY Mellon's Pershing CEO, Jim Crowley. He's with us on the phone in New Jersey. Still with us also is BNY Mellon's Pershing COO, Emily Schlosser. She's on the phone in New York City. It's all about BNY Mellon Pershing Insight 2021, held virtually this year. It gets underway next Tuesday. Jim, something we talk about on a daily basis here at Bloomberg. Even today, we're looking at AMC. It's just kind of off the charts. These meme stocks and the rise of alternative investing platforms, whether it's Reddit, whether it's Robinhood. We are really kind of watching this and how it's upending what seems to be kind of the mainstay financial community. What are your members? What are your, the groups that the folks that come to Insight? What do they want to know about this?
Yeah, so it's been quite interesting, Carol. Thankfully, our platform has, through all of the Reddit and meme stock, volume volatility, has performed quite well. Our clients, interestingly enough, while we see elevated transaction volumes in these names, the overall dollar value, notional value of the transactions and things that we're doing for our clients, it's relatively small because our clients are much more what I would call financial planning based, wealth based. And so while there may be some transaction activity in these names, it on a relative basis is really, it's a fraction of their overall, what they're dealing with when they talk about the wealth of their clients.
Hey, Jim, what about when it comes to SPACs? We interviewed Anthony Noto yesterday, who's the CEO of SoFi. They went public via SPAC yesterday. If we were talking about this, at the beginning of the pandemic last year, we probably wouldn't even have asked you about SPACs.
Right.
Yeah. Another sort of rebirth.
Rebirth, that's a good way of putting it.
Right, because it's not new.
No.
Yeah.
These are not new, right? We've seen them before. And again, I would say that if you were to talk to any one of our clients or a number of our clients, they have an interest, obviously. I mean, it's an interesting vehicle for which clients are coming public and coming to market, and some very innovative companies. And so, it's something that our clients have an interest in. But if you were to take a look at their overall portfolio, it's very small of what they're putting into portfolios.
Which is interesting, and that's good to get that perspective. Hey, Emily, come on back in on our conversation. You worked at Goldman. You were in charge of their global markets division. You operationally have had to look at BNY Mellon Pershing and, look at what the needs are for clients and your team around the globe. How do things look in terms of us getting on the other side of the pandemic?
Yeah, I think, first of all, I did come from Goldman. I was in charge of change management there at their global markets division. And so I'm excited to bring much of my transformation expertise to Pershing. Some of the things that clients are looking for are really around digital capabilities, which not surprising and has certainly been accelerated by what we've seen through the course of the pandemic. I think that the clients are really looking for enhanced usability. I mean, really, their expectations are being set by the ease with which they can do anything else in the digital world, from personal banking to ordering an Uber to getting food and groceries delivered, right? So we're seeing an elevated expectation around the ultimate usability and experience. And as such, we are uplifting our advisory and investment platforms to improve the way that our advisors can help their clients move money, so they can onboard new accounts. We're providing new modern look and feel, streamlined navigation. So we're really excited about what we can bring to bear in terms of our digital platforms.
Just got about 30 seconds left here. Jim or Emily, you guys have Dr. Gupta, Sanjay Gupta of CNN, Leslie Odom Jr. I've met him at the Boston Pops. Really nice guy.
I haven't even seen Hamilton.
I'm excited for you. I wish we were there. Jim, any thoughts on some of the speakers? And just quickly.
Oh, okay. Well, look, one of the speakers I've been talking about is Adam Grant and his book that he's got out. And Emily and I have been rethinking everything that we've been doing around the company related to this topic of transformation, and not assuming that we know what our clients are expecting. So it's been a great ride for the last 15 months getting through this pandemic. Looking forward to getting to the other side.
Yeah.
And seeing you all hopefully in Dallas with us in June of next year.
Fingers crossed, all of them. So looking forward to it. Guys, have a great event. Good luck with it all. Jim Crowley, CEO at BNY Mellon's Pershing, and Emily Schlosser. She is the Chief Operating Officer at BNY Mellon's Pershing. Both of them joining us on the phone.
Let's get a check of the latest world and national news with Nancy Lyons in D.C. Hey, Nance.
Hey, Tim, it looks as if there are differing takes on the current rise in prices. Government economists see it as transitory, relating to supply bottlenecks as the economy gets back to growth, while Republicans predict inflation will get much worse due to the administration's spending plans.
Inflation is indeed having a political dimension. Greg Valliere, chief political strategist for the firm AGM.
You see a really acute shortage of labor, and you see housing prices on fire. And I think a lot of consumers tend to blame the incumbent president. And the Republicans, who have been desperate for issues that will give them traction, may have an issue.
Valliere now expects a compromise infrastructure bill will be enacted, and that will be seen as a win for President Biden. In Washington, Irv Chapman, Bloomberg Radio.
Vice President Kamala Harris is slated to visit Guatemala and meet with that nation's president to discuss the root causes of why migrants have been trying to come to the U.S. The vice president today spoke with reporters about the trip.
It's going to be an honest and real conversation. So I'm there to listen as much as I am to share perspective.
Harris will also be visiting Mexico next week. The world's largest meat processing company is getting back to work after production around the world was disrupted by a cyber attack. It happened just weeks after a similar incident shut down a U.S. oil pipeline. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. So a couple of stories we got to bring to you, and we are watching some of the cyber attacks that are happening and the ransomware as a result are being asked for. One is Martha's Vineyard and the Nantucket Ferry hit by, Tim, a ransomware attack.
Yeah, the Steamship Authority, which runs the ferries to Martha's Vineyard and Nantucket, this one coming from Cape Cod, said a ransomware attack was affecting operations on Wednesday. That means that scheduled trips to the islands continue to operate, but the availability of credit card systems to process tickets is limited, which may cause delays. We heard about this with the Colonial Pipeline hack just in the last few weeks, that it was a system associated with the pipeline, not the pipeline itself.
Right.
And it speaks to the idea that there are multiple ways, multiple means of entry into these systems for cyber attackers.
Right. It's not like you have to just, close it down completely, but you can do a side system or something that makes it more difficult for it to operate.
They're not hacking the navigation element of the ship, for example.
And this, they're saying there's no impact on the safety of operations. The issue doesn't affect radar or GPS functionality, which would be crucial. The authority.
Those captains know how to get to and from.
No, you don't. Like you, especially if it gets foggy or something, you'd be.
Yes, you are the sailor. I should listen to you.
Like I'd like to have that. You can watch the sun a little bit, and that can give you some idea of kind of where things are. At the same time, story in the New York Times. You just shared this with us. Hackers with suspected ties to China penetrated the New York Transit Agency's computer systems back in April. An MTA document shows transit officials say the intrusion did not pose a risk to riders. Again, this is coming from the New York Times.
Yeah, the Times reports that a hacking group believed to have links to the Chinese government penetrated the MTA computer systems that exposed vulnerabilities in a vast transportation network. And I'm reading from the Times here that carries millions of people every day. That's according to an MTA document that outlined the breach. This, according to the New York Times.
And again, the hackers did not gain access to systems that control train cars, and rider safety was not at risk, transit officials said, adding that the intrusion appeared to have done little, if any, damage. The thing is, at some point...
What's next?
Will safety be a problem?
Will financial systems? Will
you and I talk about this all the time, right?
Yeah.
Like, just think about bank records, 401k,
it's very scary.
Investments. Sorry, everybody, to freak you out. This is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Pared back gains as the tussle between economic optimism and inflation concern continues to play out in markets. S&P 500 index a little changed, up 1 point right now. NASDAQ is down 21, a drop of 0.1%. The NASDAQ 100 index down by 0.2%. The Dow up 11, up less than 0.1%. 10-year yield 1.59%. Gold right now up 0.4%, 19.08 the ounce, and West Texas Intermediate crude up 1.6%, 68.82 a barrel. Brent crude at 71.34, holding above $71 a barrel. Brent up today by 1.5%. After earnings, Zoom video communications down 0.8%. Also after earnings, Hewlett Packard Enterprise down now by 0.5%. I'm Charlie Cullen. This is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, in the current issue of Bloomberg Businessweek magazine is a story about the $250 million initiative, Tim, that is on a mission to help less prosperous schools bridge the wealth gap through investments in late-stage startups. We're really talking about accessing the venture scene.
Yeah, and for good reason, because HBCUs have a tiny fraction of the endowments of colleges and universities in the United States. Joining us is Janet Lauren, higher education finance reporter at Bloomberg News. She joins us on the phone from New York. Janet, before we get into what HBCUs are doing right now.
Historically black colleges and universities,
exactly.
For those who
yes.
may not know. Yeah.
Take us into the finances of higher education and who has the endowments and why they're so concentrated at the top.
So the richest schools also happen to be some of the oldest schools, Harvard, Yale, and Princeton, for example. And they've been pretty sophisticated investors for a long time. Yale, for example, got into venture capital in 1976. And some of their early investments in VC firms have been quite fruitful. For example, if you look at their investment in LinkedIn of a few $1 million, turned into about $85 million when LinkedIn went public. And, you have to have money to make these allocations in venture capital. And these HBCUs, their endowments are quite small. We mentioned a few in the story. Howard is the largest with about $700 million, but more average is Florida A&M with about $100 million. And, you can't make money in some ways if you don't have money. And it's hard to get access to some of the best funds if you don't have the money to invest.
Well, before we get into whether it's a good idea, because you do wonder about the exposure if you're kind of a smaller school or a school with a smaller endowment, risk reward. But if things don't turn out well, it could really impact your endowment. But one thing that you make, Janet, that's so important, I think the point in your story, why this matters is that the difference in these endowments and the size of them, impacts the ability to offer student aid, attract students, top professors, build facilities. I mean, there is a trickle down, trickle up, trickle across the side impact as a result.
Absolutely. And, a lot of these HBCUs, you look at the share of students who are recipients of Pell Grants for the lowest income students, and the shares are very high. And these schools would like to be able to offer a lot more financial aid, but, they're just trying to make the lights go on. And they don't have a lot of money for, not only building glorious STEM buildings, but, making repairs to their, often 100-year-old buildings. So for them, they're operating on very thin margins to function, to give the aid they can, to try to attract professors. And they just don't have a lot of room to lose.
So what are HBCUs doing, or what is Base 10 Partners doing to try to alleviate this?
So they're trying to entice HBCUs to invest in a new fund. And what is unusual is they're not charging fees, which, as you know, their fees can be quite high, especially when private equity and venture capital are successful. You're paying, fees. And then they're giving some of the carry to create scholarships for these students, but also trying to help build the pipeline of recruiting, interns, hiring, practice with job interviews for some of these students. And the portfolio companies that they can investing in, they're also very interested in improving diversity and having access to students that they typically may not be recruiting from.
Well, one issue, though, with venture capital is that you have to be in a position in order to be comfortable losing your entire investment, because that's what venture capital is. For every Facebook or LinkedIn, there are dozens of bets that don't end up working out. What are they doing to try to offset some of that risk?
Well, we're talking about later stage companies, not early stage companies that may likely fail, and I think that's part of the a little bit alleviating the risk. Because if you are an endowment of about $100 million, you often just don't have a lot of options.
Right.
You might put it in an index fund. We had a comment from the former Carthage College CEO in Wisconsin who beat the pants off of Harvard, his 10-year average, because he had a very simple formula of vanilla funds. Or if you could invest in some fund of funds, but you're still paying fees.
So tell us about, though, this $250 million fund and the individual behind it all.
So he is a Stanford alum. He, has been successful, Ajo, and he was really interested and moved by the death of George Floyd to try to help these companies, these schools. As he said, systematic inequality is really about wealth inequality. He was born in Spain. He didn't have the typical experience growing up as an African American in the United States. He went to Stanford and made some connections and decided this was something that he wanted to do.
How have HBCUs reacted, and how have they embraced or not embraced the strategy?
So some HBCUs have invested, including the schools we included in the story, Howard and Florida A&M. But not everybody. If you're a small $50 million endowment or $100 million endowment, you may not be as familiar with the idea of venture capital, and you just may think it's too risky. You still have to turn the lights on every year at the school.
Yeah, but you do think about, the conversation in many ways over the past year, right, Tim, has evolved from, we've learned it's not just about income gaps, it's about wealth gaps, and that can be generational. Mm-hmm. And I do feel like, Janet, you get to that in your story, that you do think about these schools that maybe don't have the same access to the funds that some of the really wealthier schools do, that tend to be predominantly white, and it just perpetuates a cycle that somehow it's gotta change.
Right, and if you look at, say, Yale, spurred a lot of CIOs at very big schools, Princeton, MIT, Stanford, and they tend to invest together on the same deals. So again, it becomes very clubby and very insular. And if you didn't work in the Yale investment office, you may not be invited to participate in these deals that, one of the other very wealthy schools found out about. But then again, you can't write the check because your endowment is so small.
Jenna, what's the time horizon for an investment like this? And when do we find out, and when do they find out if this was a successful way to grow their endowment?
In some ways it could be a couple of years, or it could be 10 years in the typical life of a private equity fund.
Yeah, but this is a really kind of thoughtful story, and just thinking how you change the dynamics and the trends that we've seen for such a long time. Janet Lauren, thank you so much. Higher education finance reporter at Bloomberg News, on the phone from New York City. Tim, maybe it's because my daughter's gone through, the college application process, and we've learned about a lot of schools, but there's so much money involved in these endowments, and you do wonder about the advantages for those really, really rich schools versus some other ones.
Yeah, it was shocking to read in this story the concentration of endowments of just the top 10 schools. In some ways, it really mimics the ultra wealthy in the United States and individuals who control the vast majority of the wealth in the country.
A lot of wealth in the hands of a very few, whether you're talking about colleges, universities, or individuals. You are listening to Bloomberg Business Week. Carol Massar, Tim Stanovic, and this is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. We move into the final hour trading on this Wednesday, June 2nd, with the Dow, the S&P higher, NASDAQ, and the NASDAQ 100 index both lower. Right now, the S&P is up 2 points. Little change. That's the key takeaway in today's trading right now. Up less than 0.1%. The Dow up 21, also up less than 0.1%. NASDAQ on the minus side now, down 12, a drop there of 0.1%. Equities pared back earlier gains as the tussle between economic optimism and inflation concern continued to play out in markets. 10-year yield 1.58%. Gold up 0.4%, 19.07 the ounce. And West Texas Intermediate crude now up 1.5%. WTI is at 68.72 a barrel. The Federal Reserve says the labor market is on the mend as Wall Street awaits this week's employment report. And that story here's Bloomberg.
Economic growth is perking up. The Beige Book survey says businesses are hiring again amid optimism about the post-pandemic outlook, though for now, there aren't enough people to fill the gaps. The Fed's assessment sets the stage for Friday's employment data, and economists are forecasting May's unemployment rate probably dip below 6%. Benito Giudice, Bloomberg Radio.
Movie theater chain AMC Entertainment Holdings has announced that it will reward small-time investors who have been instrumental in AMC's wild, logic-defying share rally this year with goodies such as special screenings and free popcorn. Today, we've got AMC popping higher, up now by 94% so far this year. The stock is up by more than 2,800%. Tesla shares, they are on track for their biggest decline in 3 weeks, sitting out the broader market's gains today after EV sales showed the company lost global market share in April. Tesla now lower by 3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, folks, we like to do a daily check on the virus and the vaccine rollout. And one headline that just crossed, catching our attention, we are seeing that New Jersey planning to shut some of the mega sites and New York City planning some school vaccines. So there's a lot still going on here, certainly in the U.S. and on a global basis. One of our go-to people, I don't know that he's gotten any sleep in the last 12, 13, 14 months, but he's back in our studio.
He did the virus tracker. He and his team did the vaccine tracker. You saw his tweets each and every day. We waited
created
for them
5 vaccines.
The man, the myth, the legend, Drew Armstrong is senior editor for U.S. Healthcare for Bloomberg News. He joins us.
Didn't create the vaccines. I'm going to get in trouble. Yeah, okay. But I think he probably could have.
I think people know you were joking, but we do love him anyway. He is senior editor for U.S. Healthcare, Bloomberg News. Joins us from the Bloomberg Interactive Broker Studios. Drew, you mentioned that this is your first day back in the office.
It is.
Since the fall.
Since I believe September.
But I feel like that symbolizes something so big for where we are as a city.
Yeah, I think that's exactly right. I mean, I got my second dose of Moderna vaccine about a month ago. My wife and I immediately booked a trip to Mexico for exactly 2 weeks after my last dose, and left our lovely children, who we've seen so much of, at home with our nanny. And here I am back in the office, and I've been talking to a lot of other people who it's their first day back again as well. And yeah, I mean, you look at some of the stats where there's certainly a strong downward trend in cases, hospitalizations, deaths all around the country. Certainly some underlying things to be worried about. And if you look around the globe, it's a very different picture in a lot of places. But, a lot of my attention just as a news editor is really now focused elsewhere outside the United States in terms of where the story is and where the crisis is. And things are beginning to feel much, much different here, personally and from everybody I speak to and have run across in talking to people in some recent travels.
It's funny because we're going to do the Big Take story, the Bloomberg Big Take, and it's about real estate investments, office, and basically where people are investing is like lab space because of what happened during the pandemic. So it's interesting to see where we're going forward. When you look around the globe, for a while, Drew, we were thinking about whatever's going on in China kind of tells us to some extent what's next for us. What do you look towards to kind of get an idea of what's next and whether or not a new wave is going to come or what have you?
Yeah, I think one of the things that we're really keeping a close eye on is, some of these outbreaks in South America where you're seeing very significant, COVID numbers, and in some places, despite quite real efforts to vaccinate people. I mean, you look at what's happening in Chile. They've got a better vaccination coverage than the United States, and yet they still have a pretty heinous outbreak that they're dealing with.
How come?
I think everybody's trying to figure that out. Is it, certain subsets of the population? Is it an issue of, variant versus vaccine? Likewise, you go around the globe to places in Asia where they have far fewer cases than we have in the U.S., and yet are still kind of on total lockdown in some of these countries. Or, you look in other places, some of our amazing reporters out in Hong Kong were just noting, about how people aren't getting the vaccine there. And it's been hard for, nightclubs and bars to open back up. So much of what's going on in the globe right now is, as much about risk perception and risk tolerance as it is about the epidemic. When we look at how people are acting, how they're approaching vaccines, how they're approaching, the inevitable some level of existing disease in the community where they are. It's as much culture as it is science, I think, at this point.
Well, speaking of the science, I'm curious as to how well the vaccines have proven to work, the mRNA vaccines specifically, because a big part of the conversation, Drew, over the last few months was, okay, well, the pandemic is not over until the world is vaccinated, and that's because there could be strains that develop in certain parts of the world that could get through and get past vaccines. Is there any indication that some variants and mutations at this point can do that?
Not with the mRNA vaccines in a meaningful way. I think, you are always going to see variants. There have been a bunch of them identified and some of, variants of concern. And it's not that they don't cause disease, because they do. I think what you're seeing, though, is that they are not causing severe disease, at least in the cases of these, mRNA vaccines, which have been proven highly, highly effective. It's worth remembering that, if you take COVID and you turn it into a cold, that's a pretty good solution. You can still have cases if they're mild cases. Yeah, exactly. I mean, that is a manageable thing. It's still not great, but the problem is more or less, at that point, it starts to go away.
What I am thinking a lot about is, do I need a booster, and do I need to mark my calendar? We had Dr. William Hazeltine on, and he's like, I've marked my calendar. This is a guy who understands biotech and science in a big way. Do all of us need to be marking our calendar 6 months from our last shot to plan for a booster?
I think it's a great question. I think the answer is we don't know. These vaccines are not old enough for us to really, really, really know how effective they will be in the real world, at 9 months, at a year, things like that. We just don't have a lot of great data on that. We have people from early on in the trials who I'm sure they're following very closely to see, what are their antibody levels, what are their infection risks, so on and so forth. But we really, frankly, do not know yet. I'm sure. I mean, we have when we see mutations, when we see viruses that change, the flu, which is highly, that has a high rate of mutation, which is why we get new flu shots every year. But with this, I think we just don't honestly know yet, what exactly those boosters are going to look like. Will it be something more like they're, tailored to new mutations in a way? If those end up being very problematic for the mRNA vaccines, are they tailored? Are they done as a booster shot? I really think that that's still going to be up in the air. I think a lot of people are very smartly betting that yes, we will need and get booster shots, but I wouldn't be surprised to see that dynamic and rollout look very, very different than the kind of initial campaign had.
So is it like we swing by the CVS or Walgreens and just grab it, or from our doctors, or is it like, do we need these mega sites to be able to quickly ramp up again? And just got about 20 seconds here, Drew.
I have a feeling it'll be a lot more like getting the flu shot every year. You'll see lower uptake, and people kind of uptake fades away as the virus does
until the next virus hits us, right?
Yeah,
because they're going to come.
Well, hopefully we're ready. Yes. We're more ready for that,
right?
We'll be doing this again at some point or another, unfortunately.
On that note.
Happy Wednesday.
Yeah, thanks, Drew.
Go home. No, I'm just kidding. We're so glad you're back.
Thanks, guys.
Drew Armstrong, he's senior editor for U.S. Healthcare. He has really kept us on the straight and narrow, really throughout this pandemic here at Bloomberg News. So a must-read, his whole team. All right, you're listening to Bloomberg Radio.
Let's get a check of the latest world and national news with Nancy Lyons in D.C. Hey, Nancy.
Hey, Tim, the president is meeting this afternoon with the lead Republican negotiator on infrastructure, Senator Shelley Moore Capito. It's another round of talks. Bloomberg's Ben Bain says there is momentum on both sides for them to reach a deal.
This is the one area that the Biden administration and Republican lawmakers seem to be willing to work together on, and really both have it in their interest to get something done.
The White House has said Republicans have until Monday to reach a deal. The president reportedly considers their latest offer unworkable because it taps unused COVID relief funds to pay for it. Well, one of the most effective vaccines against COVID-19 is under new scrutiny. Bloomberg's Nathan Hager reports.
Health officials in Israel say they're investigating a possible link between the Pfizer-BioNTech shot and heart inflammation in dozens of young men after taking the second dose. Andy Pekos is with the Johns Hopkins Bloomberg School of Public Health.
We don't know much in terms of what's causing this. There certainly does appear to be a higher rate of this happening, and I wouldn't say much higher, but it's higher than one would expect in the general population.
Israel's given the Pfizer vaccine to more than 5 million people. Of those, there have been 275 cases of myocarditis. In Washington, I'm Nathan Hager, Bloomberg Radio.
Free beer is the latest White House-backed incentive to persuade Americans to get vaccinated for COVID-19. President Biden today announced a month of action to get more shots into arms before the July 4th holiday. Anheuser-Busch is offering free beer on the 4th for those who've received their shot. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Free beer, making some free wine, and well, I've
I
already got my
tweeted
vaccine.
this morning, get your shot so
you can get a shot
because it protects you from COVID, but also so we can all get some free beer.
Oh my God, we're such a simple society, aren't we?
are.
We're just talking with Drew Armstrong, really our go-to head of our health team here in the United States for Bloomberg News, and he and his team have just done incredible reporting over the past year. Well, we were talking about the vaccine, talking about the virus. Citibankers apparently tipped back on the road. We just heard this from the folks over at BNY Mellon Pershing. They talked about being on the road, meeting with clients.
Yeah, and in fact, planning a year from now to actually get that conference, the Insight Conference that's virtual this year, back in person.
Yeah, I'm looking forward to that. So anyway, Citigroup's investment bankers, they're getting back on the road. Listen, when it comes to M&A, investment banking, that's about face-to-face. It's about relationships. I remember talking with a big banker over at JP Morgan, and it was all about relationships in terms of making deals happen.
Well, that's the big question that we've talked about really at length, Carol, is to what it looks like on the other side of this pandemic. We heard from Zoom last night, and the company reported some really strong numbers, but at the same time, questions remain about keeping a rate of growth that it had over the last year. And it's because people are getting back on the road. People are going back into work, and people are ready to travel, but perhaps maybe not to the same extent that they did before the pandemic.
Right. And what's interesting, too, we know M&A and deal-making across much of Wall Street for much of the last year. We've seen a massive surge in deals happening. Citigroup, for its part, saw revenue from investment banking surge 46% to $1.97 billion in the first 3 months of the year. But it's going to get more aggressive, and I do think many would say if you can get some face-to-face time with somebody, or you're out there hitting the pavement or on a plane meeting with people about a possible deal, you might be more likely to be the ones who carry that through.
Yeah, it's different over a conference call. It's different over a video call than it is in person.
Yeah, and let's point out, Citigroup has said most employees will ultimately work a hybrid schedule.
It makes sense.
Yeah, I think it just depends on what job you're doing.
Yeah, I think so too. And look, there's real competition from other companies that are allowing that.
Yeah, exactly. All right, you're listening to Bloomberg Business Week right here on Bloomberg Radio.
Facts, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Continues to trade little change. The Dow higher, NASDAQ lower. Let's head right over to the first word breaking news desk for today's afternoon call. And here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks mixed today in quiet trade. The Dow's currently up 30 points. S&P's gained 3. NASDAQ is lower by 8. The U.S. 10-year yield at 1.59%. Gold is up 7, and transports fall 161 points. Among the main 11 S&P sectors, real estate and energy led. Materials were under pressure, and leaders to the upside in the Dow, Chevron, and Visa, while Dow Inc. led to the downside. In other news, Dropbox spiked intraday on a report that Elliott is said to take a stake in the company, and AMC soared as much as 127% after saying it would reward small-time investors. Wrapping things up, NetApp and Splunk both report after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg Times Squawk SQUAWK on your terminal, I'm Charlie Pellicant. This is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Radio.
This is the Big Take, the best of Bloomberg's in-depth original reporting from around the globe.
What we have to make sure we do as the economy recovers is look at the data kind of broken down a bit.
These funds are becoming more and more expensive. You're looking at $15 billion for their entry level.
There have been waves of immigration that have faced a lot of resistance.
There's a lot of color behind the scenes and a great untold story.
How did Bezos really come out on top? As the cover says, Jeff wins. He always seems to win.
The Big Take on Bloomberg Radio.
All right, it's time for the Bloomberg Big Take. It's a Bloomberg exclusive you've got to know about. And today's about real estate. We talk about real estate, Tim, a lot on air, what's happened as a result of the pandemic. But go figure, there's actually a $10 billion bright spot when it comes to the office market.
There is, and Craig Giamana knows all about it. He's U.S. real estate team leader for Bloomberg News. Joins us right here in the Bloomberg Interactive Brokers studio. It's all about life sciences.
That's right. You can't do chemistry from home. And that's basically, all kidding aside, that was a quote that we had in the story. But the basic idea is that obviously the future for offices is clouded. I mean, you guys are talking about hybrid work. I think companies didn't really give up their space, but it's unclear how much more they're going to need, whether they're going to have people in there 3 days a week. So how much office space do I need in San Francisco or New York? Here's a sector of commercial real estate that is mostly an in-person thing, lab space. And there's been a lot of money going towards it because one of the most interesting things during the pandemic is that the commercial real estate investors are still out there. They have money to put to work. They don't like hotels. They have questions about malls, offices. So this is one of the places where the money is going.
I find this fascinating, Craig, because I think throughout this past year, I kept waiting for kind of real estate to fall apart. But it's been kind of reworking itself, and the money's kind of been going through where there's going to be the demand.
There's pain out there. There's certainly carnage out there. There's buildings that are worth a lot less. I mean, we're sitting in Midtown Manhattan where things are worth less. But I think the lenders were patient. I think some of the stuff the government did work. So you're right that we haven't seen the apocalypse. And the thing is, there's so much money was raised to go after these distressed opportunities, but it hasn't been as much of that. Instead, you're seeing things like this, which is investors saying, you know what we're going to need more of? Lab space. And there's some interesting history about why institutional investors did not like lab space. They were historically worried about the creditworthiness of the tenants. You're often betting on startups that have no revenue.
Like biotech, right?
Biotech, here's a biotech company that's maybe never going to make revenue. Maybe they're just going to sell a patent to Pfizer or something like that. Yeah. And I think historically landlords didn't love that, but I do think the vaccines and everything that's gone on here the last year has gotten them a lot more comfortable with the space.
Yeah, so talk a little bit about that, because the volatility is something that you certainly see play out in the equity market for publicly traded biotech companies. I mean, almost every day you go to most on the Bloomberg terminal, and it's a biotech company that perhaps failed a clinical trial, and the stock is down 60, 70, 80%. How did the pandemic change the way that investors are feeling about life sciences from a property perspective, though?
Yeah, so this space has been growing quite a bit going into the pandemic. I think in San Francisco, asking rents were up 80% over the last 5 years. Boston has been up a lot. But I do think, no question, that the vaccines and just the turnaround time, I think the feeling is that there's going to be government funding for this space, that VC money is going to go after this space. And I really think in a very clear way that the pandemic and the vaccines coming out have driven it home that this is a real industry where there's just going to be a ton of interest going forward.
And it's not just about buying existing buildings, but it's also money going into development of new buildings, right, for lab space.
Yeah, that always catches the eye of real estate reporters when you hear about people building buildings on spec, which means that they're spending a lot of money, tens if not hundreds of millions of dollars to build a building that has no tenant lined up. Sometimes that will happen with an office, but oftentimes somebody wants to say, I'm going to build this skyscraper and Apple's going to be the tenant, Amazon's going to be the tenant, Goldman Sachs is going to be the tenant, things like that. But we're now seeing a lot of spec building, people basically betting on lab space, which, there are a lot of risks associated with that. Number one is the cost of building these buildings. It's just a lot more expensive. You need air filtration, higher ceilings. And the other part of this is that it's a lot harder to repurpose these buildings if it doesn't work out.
In the U.S., Craig, is there a geographic concentration?
I would say that Boston plus Cambridge is an epicenter, and then San Francisco is the other one. San Diego is extremely hot. You do see a lot of stuff in Seattle. It's actually, interestingly, one area where New York City lags a little bit. I mean, we've got the tech campus on.
And we've got Pfizer here, too.
We've got Pfizer. But, it's really places where you see university, hospitals, research, tech. So to me, the top ones really are Boston plus, Cambridge historically, now Boston is getting some of the overflow. And it's a big deal increasingly in San Diego, and San Francisco in that area has always been a hub too.
Yeah, I remember seeing J&J, their facilities, they've got kind of a test lab, and they encourage companies to just come in and kind of, work around their projects, and J&J may support them or not, but you see a lot of it out in San Diego. You got to mention two of the names that are doing it, though, Blackstone and Kkr. These are when these guys, these private equity folks or investors do something, you watch what they do.
Yeah, they, obviously those guys have a long track record. Blackstone, I think that was their biggest real estate gain of the year. They recapitalized this Biomed Realty Trust. And then they did
it off of the financial crisis too, right? They
did
a big, real estate play.
And, Kkr, I think, is a sort of a classic pandemic story. That was an office building that they bought for about $1.1 billion, had been leased to Dropbox. Dropbox was going to have their headquarters there. All of a sudden, Dropbox says, well, people can work remotely. We're looking to sublease it. And Kkr came along and said, we're going to buy it and turn it into a biotech facility. So, I think the high-level narrative has been offices are dead. No one's ever going back to the office. So
where are you today? Where am I today?
We're all in the office here today. Obviously, look, I thought that narrative was overblown the entire time. But this is an area where I think people are saying, sure, maybe people are going to work from home a couple days a week, but we think that this space has legs for sure.
In 5 seconds, when do we know if these pay off for these companies, these bets?
Well, we'll see. It's going to take some time. Commercial real estate operates at a pretty slow pace, so we'll see in a couple years whether those spec buildings have tenants. That'll be the thing.
Yeah, because you do wonder, will they look to get out of it, right? Yeah, we'll see. So good to see you.
You too.
So good to talk about this stuff. Craig Giammona, he is U.S. real estate team leader at Bloomberg News here in our Interactive Brokers studio. You're listening to Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yes, it is. And in just a few minutes, we're going to get the chart of the day and the song of the day. It's not going to be Baby Shark, 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 Shark.
Yeah, well, that's going to be I think they call it an earworm.
Oh, come on.
I know. I'm not playing.
Why are you so cranky?
The song drives me nuts.
Baby Shark, Shark.
Yeah, it really does.
All right, Dave Wilson's going to be along. I know he's not going to be, but if he sings
Most listened
it.
to YouTube song last year.
Baby Shark, Shark, Shark.
Yeah, that's the one.
Which one, Tim? Baby Shark, Shark. Okay,
that's the
let's
one.
get to the market day with Charlie Pellet. Don't you love that song, Charlie?
Thank you, Charlie.
You guys are
Until I
cranky.
tell you guys what is on the menu with Tesla. What a story I've got coming up in a moment here. The Dow, the S&P, both higher. NASDAQ on the minus side. 28 minutes to go ahead of the closing bell here. Equities carrying back gains as the tussle between economic optimism and inflation concern continues to play out in markets. Bottom line here, little change for the S&P, NASDAQ, both holding close to no movement whatsoever. We've got the S&P up by 1 point right now. The NASDAQ Composite Index down 5. Little change there. NASDAQ 100 Index also a little change. The Dow higher by 3 right now. That is a gain of less than 0.1%. 10-year yield 1.58%. We've got gold up 0.4%. 19.07 the ounce. West Texas Intermediate crude up 1.5%. 68.72 a barrel. Germany is exploring ways to prevent a potential new wave of COVID after the summer, and it will probably need to buy Russia's Sputnik vaccine. American COVID-19 hospitalizations have fallen to 3.41%, the least since March of 2020. And now the big question is, what can the U.S. do to help the rest of the world? Lauren Sauer is an assistant professor of emergency medicine at Johns Hopkins Bloomberg School of Public Health.
I think we can be doing a lot to support the global response to the pandemic, especially in places where they're not seeing that downward trend yet. And we can do that by sharing vaccine. We can do that by supporting healthcare worker response if places need personnel support. We can do that by sharing policies, and we can do it by being good stewards of the vaccine and the resources that we have. So making sure that we get vaccinated here as well.
Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine names that we track, Pfizer up 0.6%. Its German partner BioNTech, the ADR is up 5.9%. ADRs of AstraZeneca down 0.3%. Moderna up 3.4%. Johnson & Johnson up by 0.3%. Move over, In-N-Out Burger. Elon Musk, CEO of Tesla, one step closer to opening a diner. On May 27th, Tesla filed applications with the U.S. Patent and Trademark Office to use its T logo design and 2 other iterations of its Tesla stylized logo for use in the food industry. Definitely a big what. We've got Tesla shares, what, as in Tesla? We've got Tesla shares down 3.1%.
Elon, it's the board calling. Focus, focus, focus.
It's a Bloomberg News report, but what a story.
Oh, man. Good stuff as always. All right, Charlie, thank you so much.
It's an energy company, right? This is Bloomberg.
Every day it's getting less hard to be never together but close sometimes. Windows and rain, bluebirds and planes, never together but they're close sometimes.
I love the look.
It's cheerful.
Is this like sunshines and like miracles and rainbows and unicorns and rainbows or something?
Never together but close sometimes. That's what
Who
it
is
is.
this?
Carlene Carter.
Ah.
As in Johnny Cash's stepdaughter.
Okay, right.
You
Because
know?
there's like, yeah, the
June
little
Carter's
bit of a
daughter.
family
Yeah,
org chart.
absolutely.
Oldish?
It's from her debut album back in '78. So
Okay.
yes,
Okay.
oldish is right. Relatively.
Well, going back to the archives. All right,
You
let's
know, it's
close the
amazing
archive
what I
door.
can pull out of my head at a moment like that. You know?
You never cease to amaze us. All right, so song and chart. Take us there.
Yeah, absolutely. what we're talking about here is the relationship between stock volatility and bond yields and how it plays out in terms of inflation. The folks over at the Sentiment Trader blog, specifically Jason Gepfert, who's the founder of that blog, also at Sundial Capital Research, he made the connection in a post the other day. And what's interesting about it is, he's basically making the argument that inflation is really driving them both at this point, but, that stock volatility is taking its cue to some extent from bond yields. What we're talking about here is a correlation between the VIX index, which, we all know it's tied into S&P 500 options, and the yield on the 10-year Treasury note. And when you run the numbers on the Bloomberg terminal, you find out within the past week, the 20-day correlation reached its highest level since September 1999. I mean, it's been a long time since we really had to focus on inflation because it's been so low. So you have to go back to the 90s to see sort of a similar situation to where we are now. And as Gepfert wrote, inflation fears have been driving stock volatility.
So what does that mean for markets? What does that mean for markets moving forward?
Well, it means that it's a big issue, and that it has ramifications for stocks as well as bonds, just in terms of what people are anticipating over time. It's why you have to pay more in the option market to guard against the risk of a market decline. We have a chart out on what's called the skew index. It shows you that, again, using options as your reference point. So, put it all together, and this is definitely going to be something to watch.
So back in 99, I can understand why the VIX was up. Was it tied to inflation concerns, or was it tied to the craziness in the tech market?
Well, perhaps a little bit of both, but the chart goes all the way back to the beginning of the 90s, and readings like we had in 1999 were not uncommon during that decade. But since then, you just haven't seen them, which is why the current situation stands out. If you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
You could have gone with Bob Marley and the Wailers. Let's get together.
Yeah, I mean, there are a lot of things I could have gone with. But I had to go with a meme stock for stock of the day.
Oh, what is it?
That would be Bed Bath & Beyond.
What a wild story.
Oh, man, don't get me started on Bed Bath & Beyond.
Okay.
It's the retailer it's the retailer you walk into and you're like, how do I get out of it? Right? Because you're stuck, because you've got to go through.
I mean, there's also IKEA.
But they're trying to change that.
You're right.
Here's the thing. I mean, it's kind of like AMC Entertainment. There is a bit of a fundamental story, you might say. In this case, they're rolling out 3 private brands. Airtable for the kitchen, Wild Stage for the home, and Squared Away for storage. And the whole idea is that they'll be more profitable than other people's brands which they sell, and that was enough to get everybody excited. And as we speak, Bed Bath & Beyond is up 51%. It's headed for its biggest gain ever, and ever goes back to 1992.
Listen, Reddit investors, et cetera, this is a stock, Bed Bath & Beyond, 33.3% percentage of float is being shorted right now. So you've got to be targeting those companies where you could see that kind of movement.
Yeah, it certainly ties into the theme that's emerged this year with those kinds of shares.
Let's get to Washington, D.C. for a check of world and national news. Thank you, Dave Wilson.
Thanks, Tim. President Biden says this is a month of action on COVID-19 vaccines. He says child care centers will be offering free drop-offs so that people can receive a shot. And his administration is also implementing shots at the shops.
Local barbers, stylists, they become key advocates for vaccinations in their communities, offering information to customers, booking appointments for them, even using their own businesses as vaccination sites.
Biden says barbers and stylists will be expanding those efforts in the next month. He has set a goal of 70% of Americans being vaccinated by July 4th. Well, Biden is pushing to close a tax break that helped his predecessor amass a fortune.
President Biden's plan would narrow a provision allowing real estate investors to avoid capital gains taxes when they sell property as long as they use their gains to buy more. Former President Trump benefited from the rule when his partner sold property for nearly $2 billion, then bought more, putting $500 million in Trump's pocket without having to pay taxes. Defenders say the tax break shores up the real estate market. The White House says repealing it could raise $9 $19.6 billion over 10 years. In Washington, I'm Amy Morris, Bloomberg Radio.
It could be the end of an era at Duke University. There are multiple reports that basketball coach Mike Krzyzewski will retire following this upcoming season. He would be resigning after 41 years at the helm of a program that's won 5 national titles. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Just want to bring everyone a headline crossing the Bloomberg terminal, a story developing. The Exxon activists, remember we talked about this, engine number one, they are a small investor, owned a fraction of Exxon shares, and yet in that latest Exxon shareholder vote, they won a couple of board seats, and now it looks like they're winning a third board seat in a preliminary vote. I don't know exactly the context of all of this, but nonetheless, certainly upping its presence when it comes to Exxon.
Yeah, and the changes that the activists will be pushing for remain to be seen, and how it changes the company's business.
You know, it's interesting because, there was a story out yesterday by our Claire Ballantyne just talking about this tiny activist, engine number one, how they are looking at now the $6.3 trillion ETF industries. They're now planning to launch their first exchange-traded fund. The Transform 500 ETF's goal is to encourage changes at the companies it holds through proxy voting, according to regulatory filing.
Well, a small activist investor that is getting bigger.
Yeah, exactly. All right, in the meantime, we'll watch that developing story. Another developing story, Baby Shark, Shark.
Yeah, you've been waiting for this one all day.
Oh, is there a story about Baby Shark?
There is. The investor in Baby Shark jumps because there is one after Elon Musk tweets on a viral song. It's Samsung Publishing Company. It's a shareholder and the producer of Baby Shark's viral YouTube song. I didn't know that there was a shareholder in the producer. Rallied after Elon Musk tweeted about the Kitty Pop jingle.
Yeah, I looked for an ADR. There isn't any here traded in the United States. It's a Seoul-based company, and it owns the second largest stake in the song's producer, Smart Steady, climbing as much as 10% to the highest level since early May. The gains have helped the stock more than quadruple since the end of 2018 as the song became popular. Even a cryptocurrency named after the song was minted last month.
He tweeted
You
during...
think I'm crazy by bringing this up?
I don't think you're crazy. Musk tweeted... It shows the power of Musk's tweets, though, which get him in trouble sometimes.
Baby Shark crushes all, he tweeted. More views than humans.
It's true.
Folks, we are living in interesting times. That's the understatement of 2021. This is Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Sources tell Bloomberg ExxonMobil activist investor Engine number 1 is expected to win a third seat on the oil giant's board. Preliminary tallies show the newest nominee from Engine number 1 slate elected to Exxon's 12-member board is private equity investor Alexander Karstner. This again according to sources who asked not to be identified. Exxon declined to comment. The results of the vote could be released as early as this afternoon. ExxonMobil shares are up now by 0.8%. The Dow, the S&P, NASDAQ, they're all higher. Right now, we've got 12 minutes to go ahead of the closing bell. Little change, but it has been a session in which stocks have been swinging between gains and losses. Certainly true for the Dow, the S&P, and NASDAQ. But right now, we've got the S&P up 2 points, up less than 0.1%. The Dow also up by 2 points. NASDAQ up 2 points, a gain there of less than 0.1%. NASDAQ 100 index also virtually flat on the day. It too now is higher by less than 0.1%. 10-year yield 1.59%. Gold up 0.4, 19.08 the ounce. West Texas Intermediate crude up 1.4%, 68.67 a barrel. Equities paring back gains as the tussle between economic optimism and inflation concern continues to play out in markets. I'm Charlie Pellet. This is Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Yeah, we've got just about 10 and a half minutes left in today's trading session. Been an interesting day. It feels like the overall markets, definitely some of the wind being kicked out of them because we are definitely off our highs of the session. Still up just slightly, but nonetheless, if you look at one of the meme stocks, your AMC, it's just off the chart. So trying to make sense of it all. Great to have back with us. Been looking forward to it. Doug Ramsey, he's Chief Investment Officer of the Luthold Group. Their core investment fund beating most of its peers year to date, up just about 12% or so in 2021, up 26% in the past 12 months. Doug back with us from Minneapolis. Doug, good to have you here. How are you?
I'm doing well. How about you?
Doing okay, hanging in there, trying to make sense out of some of the kind of wackiness that continues to invade our markets while trying to focus on fundamentals. What are the fundamentals you're focusing on, especially because I know you just trimmed back your equity exposure a little bit?
Well, we've been concerned, and this has been a long-running concern, and quite frankly, a little bit of a premature concern on valuations, especially U.S. large caps. I mean, whether you base it on forward earnings, we do a lot with normalized earnings, sort of the approach that Robert Shiller has popularized. We've been doing that here for decades. We are very close to the valuation peaks that we made back at the tech bubble heights 21 years ago. And the average stock, so to speak, I mean, if you look at mid, large, and small, is far more expensive than it ever was in the late 90s. So it's a very broadly expensive market. That's made it difficult. And now, we've got inflation ticking up, which one would expect at some point might lift bond yields, but that's not been the case here in the past few months. So you've still got that very low discount rate that bullish investors can argue support this valuation structure, but we're obviously skeptical.
So if you're skeptical, what do you do in a situation like this? Do you go to a little bit of cash and sort of sit on the sidelines and wait for a pullback where you can get in at a less expensive price?
Yeah, that's our thinking. As a matter of fact, rather than moving to cash, we've got a hedging strategy we've been managing for 30 years. Somehow we've been able to stay in the market shorting for 30 years, but that's because it's used as a hedge.
Right.
Our Grizzly strategy targets vulnerable stocks, valuation, momentum, earnings estimate revision, earnings quality perspective. So we use that as a hedge, and that's how we pulled back to 55%. I do expect a pretty good correction later this summer. Part of the
So
pullback
10%, just
ago,
a real 10% correction here, Doug?
Yeah, certainly I think it could carry deeper than that, especially when you look at, how far we've come off of those lows from last March. I mean, the normal first correction in a bull market retraces a pretty good piece of that.
Yeah.
And because that move is so large, I'm not sure I want to talk about percentages just because we look at, we would then be looking for bottoming conditions. But the reason we cut back now is just because, obviously it's difficult at time. The technicals still, I think, are very good. I think it's more a question of, when are markets going to respond to this inflation pickup, and when might they conclude that it's a little bit more than a transitory thing?
Listen, so investors dealing with things like, okay, is inflation transitory or not, and looking at the outlook. At the same time, you continue to have the administration making moves. We just had a headline crossing. President Biden planning to amend a U.S. ban on investments in companies linked to China's military this week after the Trump-era policy was challenged in court and left investors confused kind of about the extent of its reach to subsidiary firms. This is according to People with the Matter. So again, amending President Trump's China blacklist, but and that targeted key industry. So it's just a reminder that things continue to come out of this administration, Tim, too, that can impact investors' thoughts about the outlook.
Yeah, Doug, I'm wondering what it is. What is that signal that the market gets that really shows that inflation is here to stay? Is it wage growth?
I certainly think that would be a piece of it, but I think, the housing market remaining strong and house prices continuing to escalate. I mean, you're talking about, extreme underbuilding in the U.S. housing market for the better part of a decade. As a matter of fact, we've been in the home builders. I mean, we don't believe there's a housing bubble. We're also in another sector that's been undersupplied of late, and it's a situation that's going to continue probably for a couple years, and that's semiconductor equipment. So I do think of some of these areas as sort of, chronic, not just the temporary COVID-related supply shortages. I mean, they're just things that they're going to take a while to address. So I think the issue is, we will see that the 5 and maybe even 6% CPI inflation numbers we see in the next couple months will be transitory. The issue is, what if we settle down to 3 or 3.5? That's just clearly too high for the current level of bond yields and also the current level of most equity valuations.
Hey, I want to go back to just what you said about the housing market. You said we're not in a housing bubble. Why not? We're seeing that prices remain out of reach for many. At the same time, we see that homes are selling for significantly above asking prices. What tells you we're not in a bubble?
The undersupply of the last decade. We are still at a very low rate of housing starts, just on a raw basis, let alone accounting for all the population growth in the last couple of decades. And actually, the low that we made a year ago was right about in line with the average recession low in housing starts we've seen over all the recessions going back the last 60 years. And again, that's not accounting for the expansion in household formations that's occurred over that period.
Hey, so just real quickly on inflation, because I think it's interesting what you said about we may not stay at 5 or 6%, right? But 3.5% would be problematic. Larry Fink of BlackRock, we have a story out on the Bloomberg, says that investors may be underestimating the potential for a spike in inflation. 3.5%. Is it problematic, especially if we see continued fiscal policy that is stimulative?
Absolutely. Just considering, I'm talking about from a market's perspective, yes. The old rule of thumb used to be that the forward PE on the stock market should approximate a level of 20 minus the inflation rate. The old rule of 20. This was commonplace 30 years ago, back when inflation was last considered to be a problem. It sort of disappeared from the lexicon because it's not been a problem until now. But even with the dramatic ratcheting up of forward earnings on the S&P, we're still at 22 times forward earnings. So, if we're going to hit 3.5% inflation, that would imply a more than just a correction, right? I mean, a bear market. But again, I think investors have become so convinced, I mean, aided by Fed speak, that this is transitory, that they're actually waiting for the whites of the eyes of that 3%, 3.5% inflation to stick.
Yeah.
So it could yet be a while. Hope springs eternal.
Listen, love having you on. Always do. Come back soon, please. Really appreciate it. Doug Ramsey, he is the Chief Investment Officer at the Luthold Group, on the phone from Minneapolis, just really kind of has seen a lot of market cycles and understands when it comes to valuations and, the different metrics to really kind of figure out where the market goes from here. All right, coming up next, everyone, we will be joined by our Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio, Bloomberg TV, and YouTube, counting you down to the close on this Wednesday.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick here alongside Kaylee Lyons and Taylor Riggs, counting you down to the closing bell. And here to help take us beyond the bell, Carol Masser and Tim Stenovic, bringing together our Bloomberg television, radio, and YouTube audiences worldwide to parse through the crucial moments of the trading day. And Carol, we open higher. This was a market that spent a good portion of the day higher, then spent a good portion of the day lower, getting a little bit of a bid as we get closer to the bell.
Yeah, absolutely. I think all the Fed speakers and the Fed Beige Book coming out and talking about economic momentum, keep in mind that those Beige Book minutes will be used for the next Fed meeting, so it's important to kind of understand what's going on. But you also have Fed speakers coming out, Tim, increasingly saying we've got to start thinking about the timeline for when we start tapering. I feel like that's picking up momentum.
Yeah, it certainly is. And look, markets, the S&P 500 equity market certainly took a tick lower after those Beige Book comments from the Federal Reserve, touched its lowest volume of the day just after 2 p.m. following those headlines. Trading volume today below average. I said it yesterday. I'll say it again. It's feeling like investors are waiting for that jobs report on Friday to see those May jobs numbers. But here's something that's interesting. AMC, Taylor, we're going to talk about it a ton. Right now, it is higher by more than 100%, not succeeding in pulling the Russell 2000 significantly higher than the other equity indices.
How does that happen?
You know, if you take a look at the Russell 2000 with at least $5 billion in equities, AMC and GameStop are still in the top 5 in terms of the most shorted stocks by percent equity float. So we'll dig into the numbers as you take a look at more calls than puts, Kaylee's, but certainly some open interest. Dare I say it, calmness within the bond market? Am I allowed to discuss bonds?
All
Calmness
right,
everywhere.
Let's discuss bonds. Just hold your horses here. Let's discuss stocks for a second. Getting the closing bells here in New York. This is the close of equities here. We'll get to the close of the bond market. It looks like it's going to be an up day. It looked a few minutes ago like it was going to be a down day. 42.08 on the S&P 500. That's up about 0.1%. Similar story for the NASDAQ, up about 0.1%. And the Dow Jones Industrial Average up about 0.1%. 34,600. The Russell 2000 also finishing the day. Oh, stop me if you heard this before. Up about 0.1%.
Yeah, no, don't stop. I love watching those small caps and mid caps. It's an interesting moment, guys, and I think as we wait for the next earnings round, when we wait for the next jobs report, this is a market right now that is very much driven by whatever data points or what Fed officials say, and we continue to see kind of the volatility tailor as a result.
And you take a look at where we are on a sector level. For our radio audience, this has been a theme that we've been covering for a while here, where it's energy on the top, up 1.75%, but it's also technology. So it's a classic risk on trade, and then hints of defensiveness with some of the big tech stocks, semiconductor equipment, as we continue to talk about shortages, like Elon Musk saying everyone's hoarding chips, not nice. But of course, down on the bottom, it's a similar story. You've media stocks off about 1%, but durables as well. So you're also getting a hint of that defensiveness leading to the bottom as well, Carol.
Wait, I thought you were going to talk about Elon Musk and talking about Baby Shark, because I've been just going there all day. We'll get to that in a moment. Let's talk about some of the gainers. AMC, we've got to talk about it. Tim mentioned it. We're going to talk about it more. Up 105%, and that's not even the high point of the day. Up 126% at the high. And I love the reward to its kind of small investor crowd saying, listen, we're going to give you free popcorn, some screenings. So that's what's going on. Etsy was another big gainer in today's session, up about 7%. They actually did a deal today. They bought the secondhand fashion app Depop for $1.63 billion, really trying to expand their customer base and tap a younger audience. Energy, Taylor, you mentioned that. Schlumberger up almost 8%. The CEO coming out, kind of talking his book and saying he expects the economic recovery to trigger an energy industry super cycle. And NVIDIA, another gainer, up about 3% or so. The company, actually, the shares, I should say, hitting a record. The CEO coming out, and he's got confidence that regulators will ultimately approve that $40 billion acquisition of the UK chip designer ARM. So looking forward to that, Tim.
Hey, Carol, you got the gainers, I got the decliners. AMC seeming to get all the love when it comes to movie theater chains, because IMAX finishing the day down more than 1.2%. It was cut to sell from neutral at Goldman Sachs. The analyst says that a sharp box office recovery already priced into the company's stock. Tesla finishing the day down more than 3%, growing competition, that ongoing chip shortage. Electric vehicle sales showed company lost global market share in April. Zoom Video down nearly 0.2%. The video conferencing company reported those first quarter numbers after the bell yesterday. They were strong numbers that beat expectations. They raised its outlook, but it wasn't enough for some analysts, including those at JP Morgan, Piper, and BTIG. iRhythm finishing the day down more than 17%. It plunged following the announcement that the CEO is going to step down for personal reasons after less than 6 months on the job.
All right, well, let's talk about factors now, because there's an interesting dynamic in that you actually have momentum as a factor that performed well today, ending in positive territory. Very few did. And at the very bottom, you have value. That factor down about 1.5%. So it wasn't the best day for that value trade. Something else I would note, market capitalization also performing well. We didn't see that outperformance for the small caps today, like we saw in yesterday's session. And of course, your best performing sector on the day, 1 month vol, Taylor.
It is calmness in the bond markets, Kaylee, that is not volatility. We're unch on the day. We've been really, though, Romaine, talking about this range-bound activity between a 153 and a 170, breaking higher through a 170 on the 10-year would be moving more towards 2%. Breakthrough, of course, down through 153 would mean something different. Unch on the day.
That's a look back. A lot moving here after hours. Splunk, that software infrastructure company, out with earnings. Those shares down here in the post-market. 1Q annual recurring revenue pretty much coming in on the nose for what the street was expecting, $2.47 billion. Adjusted loss per share, though, was a little bit wider than what the street was expecting, 91 cents versus a loss of 70 cents a share. 2Q revenue guidance coming in also somewhat light, 550 to 570. That's the range. The average estimate on the street, 561.
All right, let's talk about some of the other news after the closing bell. FireEye to sell FireEye products to Symphony for a $1.2 billion deal there. And ExxonMobil, the activist investor, engine number one, looks like they're getting another seat, so 3 board seats. Again, remember, this is that small-time investor's been pushing for changes, especially when it comes to climate change at ExxonMobil, but winning a 3rd seat, it looks like, at least based on preliminary results on the oil giants board. Boy, it feels like the winds are changing when it comes to climate change and those big oils.
You know, Romaine, we have to go back to some of the other big movers. Of course, energy is a big mover.
What big mover is
this? Yeah, take a guess. Unfortunately, it's
Open Door,
AMC.
There
we go.
They're giving out free popcorn, by the way. Did you hear?
Oh, are you eating your skinny pop? Oh, free popcorn for the best show on this network for a radio audience who can't see. Romaine is eating popcorn. But look, some, of course, people talking about...
This is anything goes. I don't know what you guys do on radio, but on TV, they let us do everything.
We can't even have drinks around the table. We can't even have drinks. All right, go ahead, Taylor.
We make, oh goodness. We make, for our radio audience, Romaine has now poured popcorn on his head. Thank you for saving us as we take a look at a terminal chart here.
Clean this up.
Can I just say, Baby Shark is going to have nothing on Romaine. There is your viral video tomorrow.
You know, Kaylee was interesting, though. Just the notes that we've been reading about CFA level 4 is just going to be ignoring all the fundamentals and going right into some of these meme stock trading. You do wonder, though, with that share sale, the company trying to do the right thing by shoring up their financials, paying off some debt.
And Mudrick Capital just enabling that. The question is, of course, what's going on with options activity as well. Just kind of, it's just a loop. It's just feeding into this frenzy. But as you get, retail traders pouring into those bullish options, and Romaine throwing popcorn at Taylor here on set, I'm trying to keep my focus, Tim. This is really important. Popcorn is involved.
It is a really important story. Look, AMC still has over $5 billion in debt. So raising only $230.5 million from Mudrick, it doesn't really put a dent in it. Plus, the company said that it wants to use this for, potentially acquisitions and buying other things. So it is a surprise. Look, one thing I'll say, Romaine, domain is that Adam Aron, the CEO, really seems to be leaning into the retail traders with that press release this morning.
Well, he's
Free
certainly
popcorn.
embracing it, but again, this does come back to fundamentals. I think on your decliner board, you had IMAX or something up there. It was interesting to see that downgrade today of IMAX and Cinemark, and then you sort of wonder, well, what about AMC? I mean, they're in the same business, and at some point, at $64 or whatever it closed at today, it's going to have to show improve eventually, right?
Yeah, 62.55. But you got to watch the corporate bonds. You got to watch the bonds of AMC as well. There's been some great reporting on that as well. I was looking at a story at a competitor talking about bonds below par, and how that disconnect between what you're seeing with AMC bonds versus what you're seeing with the equity. I mean, this is a stock that is up 2,800%. It's a $31 billion market cap company.
Did you make anything else, Carol, of the fact that you saw a lot of the other meme stocks rallying today, too? I mean, not only the GameStops and the Beyond Meats, but Upstarts, Churchill Capitals, like all these sort of retail favorites. Right. And you sort of wonder why all of a sudden are they sort of back out in force?
Yeah, I don't know. There's got to be something, too, where we know that these individual investors, right, are targeting, obviously, those big short companies, but you have to be smart and really kind of be careful when you get into them.
Yeah, you do. You have to wonder how it ends because someone is obviously left holding the bag.
Can we all go on a field trip to an AMC theater to watch a movie?
Only if you dump popcorn.
Only if there's more popcorn throwing on set.
How did we not talk Baby Shark? I'm really upset.
Success.
What happened with Baby Shark?
I don't know. Just Google it on, or just check out the Bloomberg terminal. All right, we got to go, guys. That does it for the cross-platform coverage on Bloomberg Radio, Bloomberg TV, and YouTube. Catch us again, same time, same place tomorrow.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Let's say companies are out there in full force, man.
Yeah, they are.
Activist investors, whether it comes to Exxon, you've got FireEye doing a deal. We're watching these meme stocks. Kind of can't wait to see what Thursday brings. It's already going to be Thursday, which is your Friday tomorrow.
It is. I'm taking Friday off. I'm already looking at after-hours movement for AMC, pulling it up right here on the terminal. It's moving. It's still moving in after-hours trading. It's taking a minute to load. But finishing the day higher, significantly higher. Carol, you mentioned, higher.
It's up almost 4% in the after-hours.
4% in the after-hours.
Yeah, it doubled last week. It doubled again today, pretty much so. But you do wonder, like you said, people can get hurt if they're on the wrong side of the trade. About 19% of float is shorted right now.
Wow.
Yeah, exactly. You have a good night.
Thank you. You too. I'll see you tomorrow.
See you tomorrow. It'll be Thursday. Your Friday. Keep it straight, everybody. All right. Let's get a check on world and national news. Over to Nancy Lyons. She is in our 99.1 newsroom in the nation's capital. Hi, Nance.
Hey, Carol. President Biden is kicking off a month-long push to get the remaining Americans at least their first COVID-19 vaccine dose. By July 4th, he wants summer to be as carefree as promised. Bloomberg's Irv Chapman with more from Washington.
The president held out the prospect that localities with high vaccination rates will see the good times continue to roll, while others will be left behind. If you are unvaccinated, you are still at risk of getting seriously ill or dying, or spreading disease to others, especially when Americans spend more time indoors again, closely gathered in the fall. From free baseball tickets to free child care for parents taking time to be vaccinated to free beer on the 4th of July, the president said companies are offering premiums, and neighborhood barber and beauty shops are volunteering to be vaccination hubs. In Washington, Irv Chapman, Bloomberg Radio.
The White House says President Biden will raise the issue of cyber attacks when he meets next month with Russian President Vladimir Putin. Federal authorities are investigating a ransomware attack on a large meat producer after a similar attack targeting a major U.S. fuel pipeline. The company says Russians are to blame. White House Press Secretary Jen Psaki.
This will certainly be a topic of discussion, that harboring criminal entities that are intending to do harm, that are doing harm to the critical infrastructure in the United States is not acceptable. We're not going to stand by that. We will raise that, and we are not going to take options off the table.
Psaki says the president does believe Putin and the Russian government have a role to play in preventing cyber attacks. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week on this Wednesday. Joining me right now, Charlie Pellet of Bloomberg Radio, Bloomberg News. And got to talk about Exxon, Charlie, because it looks like, at least based on preliminary results, that engine number one, that really small activist investor that is really kind of making Exxon do some things. Looks like that they now have a third seat on the oil giants board, at least according to those familiar.
And I shared the same disbelief that you and Tim had on the air when this news broke roughly 40 minutes ago. ExxonMobil shares, by the way, up today by 0.8%. Now, a third seat for engine number one would cap a months-long proxy fight and provide a coda to last week's dramatic meeting, which at one point was halted so the company would have more time to count the votes. And should point out that this reporting done by our Scott DeVoe and David Wethy.
Well, and listen, you do wonder what this, at least according to, as you said, Scott and David, what it means for the future leadership of CEO Darren Woods, because you do wonder, whether or not other investors are going to say, wait a minute, you're maybe not the right person to have at the top of the company, at least based on the wins by this small activist investor. But we will see, because I do think for all of the oil majors, things are changing when it comes to climate change. There's a lot more pressure on all of the companies, and management maybe just has to adjust to it. We should point out engine number one saying they are grateful for holders' consideration of nominees. They say they will help position ExxonMobil for the long term. And Charlie, you do have to wonder, what is an ExxonMobil, maybe not in 10 years from now, probably not in 5 years from now, but what is it in 20 or 30 years from now, right? What are the long-term investment plays and corporate plays? And you wonder what it'll be.
Indeed, and the oil giant has said it sees a profitable long-term future for fossil fuels, but sees no point in investing in traditional renewable energy businesses. It has also refused to commit to targets to zero out emissions, unlike a lot of its European rivals. Certainly change is coming at ExxonMobil.
Yeah, the chairman and CEO of Exxon coming out and said, we look forward to working with all of our directors to build on the progress we've made to grow long-term shareholder value and succeed in a lower carbon future. So stand by. There'll be more on this one. Thanks, Charlie.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
including the FireEye name, to a consortium led by Symphony Technology Group in an all-cash transaction for $1.2 billion. FireEye shares did advance today by just about 0.9%. After the bell, the software company Splunk reported a first-quarter adjusted loss per share of 91 cents. Estimates were for a loss of 70 cents, shares down by 2.3%. NetApp also reporting after the bell, among the tech names reporting fourth-quarter adjusted EPS, $1.17 estimates, $1.12. Shares of NetApp up by 0.6%. It was an update on Wall Street. Little change bottom line here. Choppy session, but equities rose as the tussle between economic optimism and inflation concern continued to play out in markets. S&P up 6, a gain of about 0.1%. NASDAQ up 19, up 0.1. The Dow up 25 points today, higher by 0.1%. The Dow at 34,600 even. 10-year yield 1.58%. Gold up 0.4%. 19.08 the ounce. West Texas Intermediate crude up 1.6%. 68.77 a barrel. I'm Charlie Pelletant. This is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. You're listening to Bloomberg Business Week. It is brought to you by BNY Mellon's Pershing. To learn why Insight is the essential event for the financial advice community, register now at bnymelloninsight.com. It starts June 8th. Well, not sure if you noticed, but you probably should have. Shares of Land's End, they are on a tear, up more than 40% this year. The retailer reporting earnings this morning and beating estimates for more on the quarter, the business, and the outlook. Let's bring in Land's End CEO Jerome Griffith. He joins us on the phone from Long Island, New York. Jerome, nice to have you here on Bloomberg. How are you?
Good, Carol. How you doing?
Doing okay. Hanging in there after what's been, as you know, a crazy year. Tell us about the past year and the impact that the pandemic has had on you and your team and on your business.
Well, obviously, about a year ago when we went into lockdown, it was a real shock for everyone. And, we shut doors and furloughed folks and took salary reductions very quickly and were able to try and adapt to whatever the new normal was going to be. Our demand went down in March last year, but very quickly rebounded in April and then went on a tear for the rest of the year. You've seen a lot more consumers shopping online, and most of those consumers have been coming from Gen Xers and baby boomers who have not been comfortable shopping online before. And since our business is an e-commerce business, we've been the recipients of a big increase in demand and a big increase in new customers. We just this past quarter reported 71% increase in new customer acquisition and retaining them over 55% into active customers. So yeah, we've been seeing some really good numbers. And I've got to say our troops have been extremely resilient. The folks that work in our facilities in Wisconsin have been just great to work with, and we've seen some really great performance there. Everybody's been working from home. We've been designing lines from home. We've been using 3D design. We've been using architectural boards so our designers can share ideas back and forth while working remotely. And what we've actually found is we've done a really good job. We've been extremely efficient. Our folks are very happy working remotely. And as we get ready to return to the office in September, we're going to see a pretty liberal hybrid work environment where people are being just as creative, if not more creative, and coming up with great new ideas for us to continue to move the business forward.
That is really fascinating because it's in contrast to really what we're seeing in the financial community where there is it feels like a real big push to get everybody back to the office. Does it mean, though, Jerome, that you guys might give up some real estate space because you just won't need it?
No, we own all of our real estate in Wisconsin, so there's no sense to give anything up. What we might do is repurpose some of it, and we're thinking about that. But no, generally, we'll have people coming back into the office on a hybrid schedule, and we may move people from one building to another to make it more efficient, but that would be about it.
So when you talk about repurpose, does that mean you might rent it out to other folks?
We could. We haven't made it that far yet. We're still in the thinking stages right now.
All right. So talk to me about retail trends. You said that you guys had a lot of new customers actually come on. What were people buying during the pandemic? And what about those trends, if they were different from pre-pandemic levels, do you think stays with us?
Going into the pandemic, we had already had a tagline for marketing purposes that said, let's get comfy. The most important thing to our consumer is comfort in fit and fabric. And while that was performing extremely well going into the pandemic, as we went through the pandemic, the requests for knitwear, loungewear, sleepwear, home, bedding, bath towels really went through the roof. I would say the only thing that was more of an anomaly for us was the quick increase in home. But generally, people come to us for comfortable clothing. We are known as a very casual brand, and we've seen the demand not only continue to increase through the pandemic, but as we're coming out of it, it continues to stay very strong. We think that as people return to the office, the newfound comfort world, they're not going to want to give it up. We found that our employees don't want to give up the freedom that they have, and they don't want to give up the comfort. And this is what we're hearing from our customers as well.
Yeah, that's kind of interesting. But I agree. I see it even in colleagues who come back. I mean, I walk in a pair of jeans. I don't know that I used to do that even if I change at work into kind of on-air clothes. It's just our mindset has changed, and I think about what I really need. What about the supply chain? How did that work throughout the pandemic, or how has what happened during the pandemic maybe changed how you want to do it going forward?
I think from our manufacturer standpoint, they've done an amazingly good job. People have pivoted very quickly with either gearing up or gearing down production. And some of them had a hard time with COVID. Some people had to close their plants because of heavy COVID cases. But generally, they've been able to manage it relatively well. Where we've seen problems is really getting goods into the country. The port congestion has just been really terrible on the West Coast, and that tends to add literally weeks to the supply chain. In addition to that, you've seen increases in pricing coming into the U.S., and then from your hubs, getting deliveries to consumers. That's also been increasing in price. And probably the scariest thing that's been happening is a lack of labor market. Yeah. People are happy to stay home and collect unemployment versus going out and getting a job in a pretty hot economy.
So you see it directly. You see it directly.
Oh, yeah, you can see. Well, we're gearing up for back to school right now. And as you know, we have a pretty sizable school uniform business where we embroider logos and crests and hem pants and things like that. So we have a very large need for people in the warehouses.
Jerome, hang on
it's hard to hire.
Hang on for a second. I got to do a little bit of news, but I want to come back and talk some more. We're going to come back to the Land's End CEO Jerome Griffith right here on Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, we're going to get back to the CEO of Lands' End, Jerome Griffith, in just a moment. I want to ask him about their third-party marketplace for sellers. I want to ask him about what the outlook is for that and what they plan to do with it, and also about some of their partnerships, including with Draper James, Reese Witherspoon's brand. So we'll get to that in just a moment. Right now, though, let's get back to some of the news after the close with Charlie Bellett.
Thank you very much. Lots of headlines to pass along. We begin with the Federal Reserve. The Federal Reserve Board plans to begin gradually selling a portfolio of corporate debt purchased through an emergency lending facility launched last year as the COVID-19 pandemic was spreading panic through financial markets. From Israel, word that Israeli centrist Yair Lapid has formed a coalition that can unseat Prime Minister Benjamin Netanyahu. Israel's longest-serving Prime Minister Lapid is an Israeli politician and a former journalist. It was an up day on Wall Street. We had late-day gains. For the most part, though, choppy session. Stocks finished well off session highs. S&P up 6 to 4208, a gain of 0.1%. The Dow up 25, higher by 0.1%. NASDAQ up 19, up 0.1%. 10-year yield 1.58%. Worth mentioning the year-to-date numbers on the S&P so far this year up 12%. The Dow up 13%. To put that in context, NASDAQ up by 6.7%. Gold up 0.4%, 19.08 the ounce. West Texas Intermediate crude up 1.5%, 68.71 a barrel. The Federal Reserve's Regional Economic Survey, the Beige Book, says growth is perking up at a moderate pace and the labor market is improving. Fed Governor Lael Brainerd says there are risks on both sides of monetary policy right now as the U.S. economy surges ahead in a post-pandemic boom while millions of people remain unemployed. As for the economic backdrop and the Federal Reserve, Laura Rain is chief economist at FS Investments.
I think they're going to have a lot of trouble with the fact that I think the labor market gets much stickier, much harder to improve from here, and inflation is going to be uncomfortably high. And no matter what they say, it's going to continue to be a hot button issue for markets. It's going to continue to cause these sort of bouts of volatility. And the Fed is going to really have trouble talking out of both sides of their mouth on this one.
Elon Musk, CEO of Tesla, is one step closer to opening a diner. Tesla has filed applications with the U.S. Patent and Trademark Office to use its T logo design and 2 other iterations of its Tesla-stylized logo for use in the food industry. Tesla shares today declining by 3%. AMC Entertainment announced that it will be rewarding small-time investors who have been instrumental in AMC's wild rally this year with goodies such as special screenings and free popcorn. AMC up today by another 95.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Let me get back to Lands' End CEO Jerome Griffith, still with us on the phone from Long Island. The company reporting earnings earlier today, beating estimates, raising their outlook for the next fiscal year, and just talking about the business in particular. This stock has been on quite a run, up 37% in the past 9 days. Hey, Jerome, one thing I did want to ask you, and Charlie Pellet just talked about AMC. We have been all obsessed a little bit with these meme stocks that have been on a tear. Your stock has had quite a run in the last 9 days, as I said, almost up about 40% here. I was reading some things that some are speculating that Lands' End stock is getting caught up in the meme stock trading. What do you say to that? Because the stock was up 17% yesterday before earnings, and it was hard to make sense of why. What are your thoughts on this? And I'm curious if you're getting questions about this.
We have a smaller float, so you'll see when it comes to announcement times around the quarters, you'll see some pretty volatile swings in and out of the announcement date. But generally, no, I wouldn't think that we're a meme stock at this point in time.
Okay, so not worried about getting caught up in the craziness of it.
I'm not worried about it, no.
Okay, so let's talk a little bit more about the business because there's a lot of stuff that's interesting going on. First of all, one thing I want to ask you, you mentioned uniforms before. That's a big business. I've bought uniforms for you, for my daughter, for school. I'm assuming that business, did it stop completely or fall off a lot in the past year?
In 2020, it fell off pretty far. A couple of parts of the business were tough. Obviously, the school part of the business was very difficult. And then in our national accounts, we have an inordinately large relationship with the travel industry. So we do Avis Rent-A-Cars, Hampton Inns, Delta Airlines, American Airlines, and that was challenged. But what we've seen coming into the back part of 2020 and then into 2021 is a much faster than expected recovery. The area that's still challenged in the uniform business is really the small, medium-sized businesses, and that's going to be dependent upon the economy as we run through 2021 to come back.
But is it getting back to or close to pre-pandemic levels from what you're seeing from some of the bigger accounts? Yeah, it is. We think that the school business will be back to pretty much normal by this year, and then the national account business, depending on the back part of the year, but we see that going much faster than what we had anticipated. So talk to me about this third-party marketplace for sellers. Interesting. And is this a way? Yeah, go ahead.
Yeah, we brought the technology in last year and formally launched the marketplace in the fourth quarter of 2020. It performed very well for us over the holiday season, and what we've done is gone out to many other brands in areas that produce product that we really don't make. So we're looking at additional home products like furniture and homewares, things like that, additional shoes, and then accessories, jewelry, scents, beauty, and bringing
high margin. That's a higher margin business, right?
Well, it's a good margin business for us. And what's great is it's low risk because we take the information, put it all up on our website, but the manufacturers are drop shipping for us, going directly to the consumer. So it gives the consumer, when they come onto our website, a much broader range of products to shop that they're looking for, and it's really de-risking it for us.
Jerome, how big a business could that be for you guys, especially if you don't have the overhead of the distribution like Amazon does? How big of a business could it ultimately be for you?
It could be tens to hundreds of millions, but we're still in the point right now where we're sizing it. We're bringing on many more brands as we speak. We expect to be well over 60 brands by the time that we get to holiday this year, and continuing to grow that and scale it over the course of the next few years.
Hey, one last thing, partnerships, Draper James, Reese Witherspoon, how important is that to kind of, keeping the brand relevant, if you will?
Yeah.
Just quickly.
It's great for the buzz, and what's even better than that is it's been great for the bottom line. We've been really pleased with the results that we saw last year, and then again this spring. In fact, we're expanding our partnership with them in the back part of the year with home furnishings and sleepwear.
Yeah.
And we've got some other exciting news coming down the pike, which we'll be able to talk about in a quarter or two. So we're working on some other fun stuff.
Well, promise me you'll come back, because I'd love, you guys have your hands on so many different things, and it's just a great snapshot of what's going on. So I hope you'll come back and talk to us about that news. Okay. Hey, be well. Really appreciate it. Jerome Griffith, he's the Land's End CEO, joining us on the phone from Long Island, as I mentioned. The company's really been making some changes. Talked about this third-party marketplace that they are putting out. They talked about that earlier this year, and the stock, as I mentioned, up almost 40% in the past 9 days alone, up about 48% so far this year. All right, back to world and national news. Back to Nancy Lyon. She is in our D.C. newsroom. Hi, Nance.
Hey, Carol, it looks like change is coming to Israel. Prime Minister Benjamin Netanyahu's opponents say they've reached a deal to form a new governing coalition, paving the way for the ouster of the longtime Israeli leader. Parliament will need to ratify the agreement in the next few days. Negotiations over a massive infrastructure upgrade are front and center today at the White House. President Biden has been meeting this afternoon with West Virginia Republican Shelley Moore Capito over the new counter-proposal from Senate Republicans. Bloomberg Government's Emily Wilkins says the two sides may be talking, but finding common ground could be tough.
Both sides are still more than $700 billion apart. They don't have an agreement on how they're going to pay for this transportation package. And in addition, President Biden and Democrats want there to be other things besides infrastructure. They want childcare. They want climate change initiatives.
Wilkins says they're working to meet a Monday deadline to reach a deal. President Biden is launching a month of action to get more shots into arms before the July 4th holiday. It includes free drop-in childcare at various childcare chains and extended hours at vaccination sites,
including pharmacies that will be open 24 hours every Friday night. For 24 hours they'll be open this month.
Biden has set a goal of having 70% of Americans vaccinated by July 4th. Churchill Downs, the home of the Kentucky Derby, is suspending 7-time Derby winner Bob Baffert. It follows word earlier today that Derby winner Medina Spirit tested positive for a steroid in a second round of tests. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Messer in our Interactive Broker studio. Joining me is Charlie Pellet, once again, of Bloomberg News. And Charlie, I know your son is older, and so my daughter's older too, so I don't think so much about summer camps anymore. But there are a lot of parents out there that are pretty stressed out after the past year and looking to get their kid into a summer camp.
Indeed, and I don't know about you, but my son went to a summer camp, same one for a number of years, and I remember his excitement. I mean, the kid would squeal with delight as we got closer and closer to the camp. I remember on a Friday night, for example, bolting out of work, getting on a New Jersey Transit train, going all the way into New Jersey, meeting my wife at a Courtyard by Marriott, meeting the kid, and then next day continuing on to Pennsylvania for the first day of camp. And it's important this year more than ever because parents, hey, I know the kids love camp, but parents, they can't wait to unload the kid or kids and get them off to camp.
Well, it is about freeing up parents so they get back into their own jobs, but it's also about, as our team here, Alex Tanzi and Payne Lubbers report, it's also giving kids some social and psychological relief after more than a year stuck at home in front of computer screens. I mean, the CDC last week loosening its guidance in hope of allowing as normal a summer as possible. I love this one mother from Heinsberg, Vermont. She says, as of now, my kiddo is on 3 wait lists. She's searching for summer care for her 6-year-old, and she says, I was able to find a camp with an opening, but it's a 2-hour round trip, so I'm hoping one of the waitlist camps will open up. It's like applying to college all over again.
Indeed. Look at you focusing on the happiness of the kids, and I'm thinking about the happiness of the parents.
I know.
Get the kids out of the house, send them off to the camp. Mom and Dad, they've got the house to themselves, and we're having fun.
Well, it's interesting, too. There's a camp, the Four Winds Westward Ho at Washington State, $1,600 a week sessions, horseback riding, archery, sailing on a 61-foot yawl. I want to go. Well, parents of second, third, and even fourth-generation campers have tried to nudge their offspring higher on the wait list of their name dropping. You name it, Charlie.
Forget the kids, leave the kids at home. Mom and Dad, we're going to camp.
That's exactly. Please send me to camp now, please. All right, Charlie, thank you so much. You're listening to Bloomberg Radio.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Federal Reserve Board plans to begin gradually selling a portfolio of corporate debt purchased through an emergency lending facility launched last year as the COVID-19 pandemic was spreading panic through financial markets. ExxonMobil, activist investor engine number one, is expected to win a third seat on the oil giant's board, this according to sources. Splunk shares now down 2% after it gave an outlook for second quarter annual recurring revenue that was below expectations. It also reported first quarter revenue that was ahead of the average analyst forecast, but Splunk trading lower now by just about 2%. ExxonMobil shares found their way today up by 0.8%. Equities advanced as the tussle between economic optimism and inflation concern continued to play out in markets. S&P up 6 to 4208, a gain of 0.1%. The Dow up 25, up 0.1%. Nasdaq up 19, up 0.1%. 10-year yield 1.58%. Gold up 0.4%, 1908 the ounce, and West Texas Intermediate crude up 1.5%, 68.77 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. So having it all, doing it all, not easy being a working parent. We know that. It's been especially hard during the pandemic when so many were working or worried about keeping their jobs while at the same time taking care of and often schooling their kids at home because of the pandemic, taking care of maybe elderly family members. So here was some perspective, taking a step back and really providing a handbook on how to do it is Daisy Dowling. She's founder and CEO of Work Parent. It's an executive coaching and training firm. She's got a new book out called Work Parent, The Complete Guide to Succeeding on the Job, Staying True to Yourself, and Raising Happy Kids. She is with us on the phone in New York City. Daisy, good to have you here with us.
Thank you so much for having me.
So tell us a little bit about this book and what you set out to do.
So when I started writing this book, I wanted it to be the book that I myself needed to read, both as an executive coach and as a mom. So for years, I worked with hardworking men and women who are trying to get ahead on the job and fulfill their ambitions and earn a living, build their careers, all while at the same time being the present, loving parents they wanted to be. And I could advise them professionally, but I didn't have such great advice or tips or a single resource I could point them to that would help them do both of those things at the same time. And then when I became a mom 9 years ago, I got, the problem came home with me and I saw it for, firsthand myself. I couldn't figure out how to find care, how to talk to my boss's boss about still wanting to get that promotion even after I had just had a baby, and every practical and ambition related question in between. And because I couldn't find that single source resource, that one complete cookbook, I decided to write it.
Well, I got to say, it reminds me of when I was pregnant and what to expect when you're expecting, because I just felt like it kind of takes you through different parts of that book, your pregnancy, but this takes you through different points of being a working parent. There's one thing that jumped out at me about communication, and I like this, communicating with the village. We do talk about it takes a village, to raise kids, to kind of do anything in this society. But how you communicate with that village is a really important thing.
It is. And listen, throughout the course of the pandemic, working parents have been so stretched and pressured that we're not doing a lot of communication when we don't need to, right? Our boss calls, we answer. Our kid needs help getting into distance learning, we're on it. But in terms of that kind of back and forth, the proactive communication with your child's caregivers, with maybe relatives, with extended members of your community, with all the people you're looking to and want to look to now in the new normal to help you not just raise your child, but build your career. You really want to think about how much you're in front of those people, what kind of connections and touch points you're having with them, and have them not be on a need to or must basis, but really be ones where you're building that relationship and making sure that village is a strong one.
So what's different about, I'm one of 7 kids. My mom was a stay-at-home mom until we got a little bit older, and we were some of my older siblings were heading off to college. Is it tougher being a working parent today than it was a few years ago or 20 years ago or 30 years ago. And I'm trying to think, 20 years ago isn't so long ago. It's, the year 2000.
Yeah, it's such a great question. And so many of my coaching clients grapple with this. I saw my parents do it. I see, some of the very senior people at work, they've done this. Why is it so hard for me? And we beat ourselves up about that. But here's the thing. Working parent doesn't just feel harder or seem harder. It actually is harder for a couple of different reasons. First of all, the way you're a working parent now, whether you're part of a dual career couple or if you're a single or solo parent, you are operating in a frame that your parents maybe didn't have to, and your grandparents almost certainly didn't have to. There was much more likely that one partner, one person at home was going to be more available to look after the great big task of raising the family. And then think about it from a technology perspective. So even if you were a working parent back in 05, 06, that's not really that long ago, right. But you weren't doing it with that kind of 24/7 pressure and constant communication and that feeling of always being on that we now have because of the smartphone. Now, don't get me wrong. I love my iPhone as much as the next person, and it's a great tool. It allows for a lot of flexibility. Really? I do.
I'm kidding a little bit, but I'm also, it's something that really kind of keeps us going 24/7.
It does. And that's not something that, 20 years ago that your mom or that your mentors had to do. So there's a constant pressure. I keep telling people we're in a new game here, and we've got to get a whole new set of tools and ways of thinking about working parenthood that will keep us on our front foot.
So you you coach parents, you do that one-on-one, if you sit down with someone, what's kind of some of the first questions you ask them so that they can figure out how to be true to their family, take care of them, but true to themselves professionally, and also make sure you're taking care of not only your physical well-being, but your mental well-being?
Yeah, so one of the first exercises I do with nearly every client is to have them look at their working parent template, which is the kind of collage-like collection of different experiences that they've had and observations they've made about working parenthood over their lifetime that has formed an image, a view of what they think working parenthood is and requires and means and what good working parents do. Maybe your mom, worked full-time but was able to at home and make dinner for the family every evening. So you may be walking around with a view that, good working parents can draw firm boundaries between work and non-work time, or that good working parents always cook or always eat with their kids. That's not right or wrong. The experience is real and it's yours and you love your mom. But if you go through your working parent life, you may have a very different profession. You may work longer hours. You may have a different family structure or a different set of ambitions, whatever it is. You need to look at all those impressions collectively and then get a little perspective and step back and say, what's going to work for me? Not my shoulds,
right.
But what am I going to decide to do?
Hey, really, really quickly, 20 seconds here. In terms of work-life balance, we've all kind of been rethinking it over the last year because of the pandemic. Will it change, or do we get back to the craziness in your view, based on the conversations? And just quickly, if you could.
I think the genie's out of the bottle. I think people had too much good stuff happen during the pandemic, as hard as it was. People are going to want to be more connected at home, more connected to their kids, more on the job and present. And I see schedules changing, but I don't see that essential inclination that what we want to do differently changing.
All right. Listen, great to check in with you. Daisy, thank you so much. Daisy Dowling, founder and CEO of Work Parent. Her book out, Work Parent, The Complete Guide to Succeeding on the Job, Staying True to Yourself, and Raising Happy Kids. Do want to mention a headline crossing: the European Union mulling a carbon levy on cement, steel, and electricity imports. So more climate change, potential for policy changes and taxation. So we continue to see that around the world. All right, you're listening to Bloomberg Business Week. Coming up next is Sound On for Tim Stanovic and the whole Bloomberg Business Week team. Have a good and safe evening, everyone. I'm Carol Masser. We'll see you tomorrow.